not doing that. $25, 24.72 level. Mm-hmm. Hello. CETX and TON. Yeah. Well, it's like mildly red today. I mean, AMC had a bigger pullback, but it's also been running kind of hard. So, just volume and overall push was pretty decent here. It's not awesome. I think we're only like 11% off the bottom. I mean, it feels like we haven't really, it's more than that. It's like 20% here, 18%. Kind of feels a little bit shaky because there's some difficulty in where we stopped, I guess. And it's interesting because like this is fairly elementary kind of stuff at this point. I mean, it's sort of basic 101 market stuff, because when you have a breakout, you are basically saying that we do not respect this resistance anymore and we're going to try to turn it into support. I mean, it's straightforward. Like, I know that people don't believe, and not everybody, not everybody's like this, but a lot of people just generally don't believe that supply and demand exists in the market, because you've got these big players who can manipulate everything, and they do to some degree manipulate a lot of stuff. There's no question about that. And we've gone through this. I'm not arguing anything. I'm just saying, like, there's a low, kind of a low-key maybe distrust of the ideas of supply and demand, but you can't ignore them. If you ignore them, then you're doing so to your own detriment. So basic supply and demand says that, we've had this resistance for a while of supply coming down, and we've been failing essentially to advance. It started up here at 560s, and then ultimately, like, we failed to advance every time. We have this big wave down that we did, almost like a double push to try to come up. But if you look at it, it's almost embarrassing how long this took, because there's like 1, 2, 3, 4. I'd even argue this is a 5 since it's pushing against another supply. 6, 7, 8. And then this took 1, 2, 3 times to break it. So you're talking about 11 times this has kind of been having difficulty getting over this supply. That is not a small number. That is a lot. So there was an extreme amount of push down here, and it's certainly possible, again, that this is part of like a phase B into a spring with a bottom, because we had a double check down here at 417, that double bottom, and then it pushed back up. It looks like it's trying to re-advance. The bear side of this is that this is a very elaborate, almost like a UTAD, like up thrusts after distribution. So this has already been distributing. Then this is going to be like a series of up thrusts. The UTID, literally, I just said up thrust after distribution, that's what it stands for, typically doesn't come all the way down to the bottom of the range first. So the proper term would be LSPY, which is a last point of supply. Like, supply is trying to do everything they can here to dump shares. This is the bear thesis, right? That supply is doing everything they can to dump shares by driving the price back up again, because they want to sell And you can think about it a number of ways. If you want to think about it as short, opening up short positions before it advances to the downside, you could think about that, so on and so forth, or people trying to get out of certain positions before it dumps. So they're going up to about 5 and trying to sell off. Okay, so we talk about supply and demand. We're talking about the ideas of where has that been happening, right? Well, supply has been pretty successful at walking this down for the last year. I mean, it feels like yesterday that we were up here almost at, this is way back in, maybe it was like 6 months, but it was way back in May. And it feels like a very, very bearish setup maybe as a result of that. There's a lot of pressure to the downside. There's a lot of challenge in this whole setup because really AMC has largely been distributive throughout its history of the last 3 years. So a lot of our preconceived ideas have been bearish in nature. So when we saw this, I don't know what you guys thought it was. I think that there's people who said that this was some kind of massive buy-in, but I would argue that there's just as much selling to some degree. I mean, this is a pretty huge retracement, and usually you don't see this kind of stuff unless somebody's trying to swap positions or something, and it's a very bizarre move. But I think this is where a lot of the bears are coming from, is that this looks right here like particularly bad, and then there's a failure to advance, right? So when we zoom out a little bit, I know my charts are kind of messy, but it's just important to note, like back here, this has been the ongoing kind of supply level. So I need you to kind of remember, like take a step back and remember where we came from, because originally this is essentially where the supply is being built. And so it makes sense. It's part of that downward trajectory on this wave. There's a lot of things to it, right? There's a downward creek here. There's probably some downtrends you could pick up on. Historically, does this level hold like a huge amount of significance? Probably not. I don't think there's any correlation with where we've been before, unless you're looking just at dollar value. Maybe you could compare it to dollar value back here, but I don't think that's very sensible. Really, the best way to compare these things, as I've argued in the past, has been to use downward parallels and to work on those structures instead. And we know that this area right here does interact quite well with what we see kind of going on in the middle back in 2020. There's a lot of clear direction there. Maybe not direction, maybe synchronization almost of the form. And so there's certainly like a method of supply and demand in here that's been initiated and used repeatedly. The search for traders, the search for liquidity, right? So when I did this, I've been looking at that in that particular way, and ultimately, like, my goal here was to ascertain whether or not we're going to get this second push up, because that would be a sign of advancement if we got that phase B top. So long time ago now, 6 months ago, really we're talking a lot about maybe this bouncing out and then coming right back up. We had a number of ways of looking at that, but basically having like a secondary move to the upside. Early on, it was like we were talking about like $18. Later, it was like, really, you don't need to come back above here and break out. You just need to come back up and test the zone, and that could be like 1380. And we talked about 1380s quite a bit. I don't think those are imaginary targets. I think they're real targets. They're there. They're not hard to find. They're just tops from back here, and they're not necessarily going to get hit when we think they're going to get hit. It may not be what we think it's going to be. Like, for example, back here when it went, finally, we didn't revisit these levels at all until we broke out, like until we were breaking out. So like, there's an idea here that maybe we were being a little bit presumptuous, thinking that we're going to come way back up. But part of the reason for that is because of how high this came to begin with. So the interpretation of this range is kind of unique in that regard. And it may very well be, however unfortunate, I don't like this idea, but it may very well be that this is kind of what we experienced, and really, like, we're not going to get something that's huge. We're just going to get something that kind of comes up and checks this level here maybe. just like we did back there, but we're going to do it in this present time frame. And to their, maybe to that credit, to that end, you'd have to then look at where is the real kind of drop zone. And I think this is where things get a little bit dicey, right? So this is kind of a weird story. I know you guys are probably like, well, you just got back. How was their Thanksgiving? And blah, 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 blah. I don't want to talk about it. It was fine. It was fine. It was just kind of like, it was good and also kind of not good, but I guess there were mostly good things. That's all that I want to say about that for now. So what I wanted to address here was that if you go back and you look at where is this level in relation to everything else, I think it's a tricky kind of setup because from the bottom, it doesn't really look like it's halfway of anything. It sort of goes back to, I guess you could argue, I don't want to argue it, but you could argue that it goes back to maybe this original kind of structure. It's like 50% of that original structure. So what makes this very difficult is there doesn't seem to be a really obvious answer, you know. I viewed this as the breakdown. You guys are probably wondering why you're jumping around because we're talking about supply and demand, like basics here. And I think it's interesting the way this broke down and how it developed like a level of resistance here that it sets up and then it breaks out later. And it doesn't ever breach like the ultimate, here it is right here. It doesn't ultimately breach that supply zone until way later. So at one point, right, this was demand, you have support, and then you've got supply. But what's weird is that it doesn't come back to it until like way later. And we don't have that in our current time frame. We kind of have something a little different. So there's a bit of a asynchronicity to that. I'm using those words again. This didn't become demand until it broke out in May. So my point is that this is a bizarre setup because when you go back and you look at this as from a technical perspective, and it can be looked at from a technical perspective, what's bizarre is that the demand that's eventually met for the second run, which ultimately, you know, comes back up and retests these guys, as you can tell, previous all-time highs. And you can see like that weakness right here, and then immediately came back down and broke through that supply zone. It did not hold, you know, so maybe we do like this right there. Okay, back at the top. What's bizarre about it though is that at the end of the day, when you go back and you look at where this sets up, the supply, it's not on the top. It's not like on the bottom, excuse me, it's on the bottom of the previous range. In fact, there's really nothing here to go off of. I mean, it's essentially like creating a level by itself. I wish there was an obvious answer, and I think it's important. We may need to kind of explore it a little bit because algorithmically, if you're thinking about this mathematically, there should have been a decent enough reason for this beyond maybe, I don't know, something. Maybe it's a fib extension. Maybe there's a reason for that on the opposite side. I'm not really sure. All I can tell you is that just from a horizontal perspective right now, I don't really know why this was picked, right? You can see like visibly, there's just not much there to go off of. Perhaps, I don't know, again, perhaps at the time, maybe it had something to do with this trend, and that would be thought of as like a weakness right here. I mean, we already know that this kind of early weakness there was leading us down to the next bottom. It becomes like a part of that parallel set, as you can see that I've got on the screen right now. And this would have been like a major weakness, I suppose. I mean, assuming that you grab those 2 points, then this would make sense. And then this would have actually been like an early advancement of that, so on and so forth, you know. So am I grasping at straws a bit? Kind of, because like I just said, I don't really know if at that time, and it would be difficult, we'd have to kind of put ourselves back in the history of things, like where was that support thought to be? This looks right because of this setup here, like it had generated a downward trend. and there's another steeper one there, but this one looks more accurate to me. Like, and then it was caught again right there, so that would have been like, oh, it's catching on this old trend, and that makes some sense, you know. And then when you look at these breakdowns, there's a lot more sensibility to it. Like, this would be the weakness that is telling you like, oh, we're gonna go low, right? So there's a developed LSPY, really large one right here, right? And then it breaks down, breaks down, breaks down. And these are those layups that Stockfather had talked about in one of his comeback videos with these LSPYs on the way down. And they're constantly going back and checking. So this one that does seem to kind of come out of nowhere seems most appropriately, I suppose, if I were going to pick one, maybe this guy. And again, I just zoomed out and looked at it because you can see the support caught there. And then, yeah, that's about all I would say about that. So the problem, I suppose, that I'm trying to present, perhaps, that's interesting. Well, I think it's interesting where that ends up over here. It's like right in our pocket at 14s. Seems about right. And then it's like this one green bar that we had on that reverse. Anyways, I don't really feel like it's as easy to find over on this one. So I've been kind of struggling to identify it. And again, it's like, I guess what we could do is use like the cross here and see if we could identify it. But then it's not even close to in the right place. It's like really low. You see how steep this is? There's just nothing really to go off of except for maybe those parallels that we already had on the other charts. And yeah, so wonderful dead end for your comeback 15 minutes, Booksy. It's not really a dead end. What I'm trying to say is that I guess in my mind, I've been kind of assuming that the target level is up here because it does correlate. And there's definitely a lot of proof there, and especially like when we looked at some of the earlier charts, it was really indicative like, oh yeah, it's going to go intersect there and meet these particular levels. And it's fine to say that. You know that it doesn't necessarily have to happen, which we knew. But then as things progressed, you just kind of missed every window. Supply took hold for 6 months. You're finally over that ledge, and then you've got alternative theories here, and I've been using different methods for understanding where that supply is. And I've kind of come to a different conclusion, I suppose, than I would have maybe come to before. So one of the things that is obviously bothersome here is that we spent 6 months or whatever below this supply. So the fact that we broke out here, we should have had pretty high volume. And I don't really think it matters that much if we needed to check that like initially first or what. This is a daily chart, so we've been going 1, 2, 3, 4, 5 days. We got a reversal here. I don't think it matters that much if we don't get kind of exactly what we need on the way out, because if you're going to come back down, then who cares, you know? It's like what happened here. There was a backup, but it happened like the same day. There was a backup to that creek, and then it busted out and was really, really fast. So the concept of this being slow isn't lost on me. I find that to be very particular. Like, it should be thought of as a unique thing because it is unique. If you've been doing 6 months of pressure down and then you finally break out, you would expect there to be maybe some more explosive action. And I'm not seeing that, which is, again, kind of strange. I think it's a little odd to me. I'm not seeing anything that thus far indicates like we're going to have some kind of significant breakdown. I think I could anticipate yesterday that this was going to break pretty easily. The volume was dropping on this rise here. It was wedging up into the pocket. It almost looked parabolic, like a little parabolic wedge here. It's just very weak in terms of RSI as well. I think on the daily or the 4 hour, it was getting pretty overblown. It was getting close to being overbought, which is not what you want. If you're going to take this thing up any higher, you've got to have some time to like cool your jets, you know. But looking at it, it's like there's some oddities here that I need to address, and I don't think I did a good job of addressing it before. So when we talk about supply and demand, you can, again, throw your nose up at it and say, oh, it doesn't matter. But it does. And although 869 is definitely an important level in my mind, I have to think about, like, well, where is the actual supply and demand at? There's one right here that's a very good candidate, and it's around 7s. And it's strange to me because 7 doesn't seem to come up very often in any of the other analysis. I don't find it to come up very often. But if you just look at it, it's very clearly like that is a very strong possibility. The other one is there's a second move that happened on this daily, and that is right here around 650s. Now that's real low, but it's important to note, like, that is another level that has very clear markers for supply and demand. And so when I look back at this, I'm like, yeah, that was clearly converted into supply. And then when it broke out, you can say whatever you want to say about after hours versus not after hours. I don't care, to have that argument right now. There's no doubt in my mind this is important, that the second day we only go up to like 660 is a big deal, and we haven't revisited that. So when I look at these things, I went back and I looked at that in comparison to what we saw with these S-curves, and I was thinking about where else we see supply. We know that on the downside, this has been pushing real low, and that this broke out and potentially could go back and check that real low push. We haven't made that back test yet. So that's why, again, bears have a really strong case, because you jumped up here and we didn't ever really go backwards. We didn't even check 350s, which would have been the very clear and evident supply demand zone here, let alone like the creek, right? That would be probably significantly lower. When you look at this early potential SOW right here, it does point very low. So it's not like a far-fetched thing to say, like, we could end up dropping pretty darn low, right? And it could take a while. So I had some ideas about that before. We talked about bear side already going into like June or something next year. It's a possibility. But what about this big push that you've been thinking was going to happen? You haven't let it go. Booksy. Well, I haven't let it go for a number of reasons, because I think there's a real possibility here based on what we saw with this first buy-in that somebody wants to take it back up and sell more. But the more I stare at the chart, the more I have to kind of just come to terms with what would that look like. I don't know that we're going to get to participate in every part of this. And that's another thing that really bugs me, because even during this run up, it went higher, than what you see on the chart at 11 something. It went up to like whatever, 13s or whatever. I mean, it was up there. So I had predicted really early in the year that we would probably have a base around 250s, and that we would end up going between 14 and like $1. And it made a lot of waves, right? Because everyone was like, you think it's going to go to $1? What? Well, again, it's not like I want it to go there, right? It's not like I'm sitting here thinking that, oh, it's going to definitely go to $1. That's not really the case. In fact, most of the early models that I drew don't actually support that. The idea of that comes from those bigger S-curves to the downside. There's a really powerful connection between some of the early chart material, like back here, we were just talking about this stuff, and like where we are presently down here. And then there's also a very important, so like not all of it, right? Because we've obviously seen other trends that are not as steep. This one's really steep. But this is like a middle of the cat ears downtrend. And I don't use those as often as I use the middle of the cat ear uptrend, but I probably should, because the middle of the cat ear downtrend does the same thing that the middle of the cat ear uptrend does, right? Which is it essentially like predicts future price action. Like, it's been highly predictive of where we're going to end up. There's no doubt in my mind that looking back at this chart, I joke about things like cat ears and stuff just to make a visual apparent to people. But like, this is like really obvious to me. Like, these waveforms that set up are doing so in a way that builds out a case that you're going to end up down here and then up here. I mean, it's essentially building the range. You're projecting a range forward. And then even now you can see where we are. It's like, well, we're kind of back in that same boat. So yeah, there's that lower trend that I've been using quite a bit, which is the bottom to the bottom to the bottom. This one's really strong as well. I don't have it on this chart, but this is like the one I've been using mostly. I think it's probably the strongest because it's the most middle of the road, so to speak. Doesn't really favor bulls or bears as much as some of the others do. It's kind of more middle of the road. And there's a lot of connection between what happens in the middle here and this higher trend, this green trend that I'm dragging around the chart right now, which again goes from the original opening price to that first bottom to where we are now on the bottom. But there is a steeper trend, you know, and it is that cat ear, and we did meet it. It's the same place. It's an intersection of that trend. I found that to be really interesting. I'm like, okay, that's weird. You know, it's still kind of hearkening towards that. So I don't want it to be the case that this could go to $1, and I don't want to make this be like this horrible comeback thing. Like, oh no, he says it's going to $1. But remember, like initially, like early in the year, I'm talking about January, it's almost been a full year now since I made that video. And that's pretty wild to think about. I had a case built that I was basically just looking at what I saw as a possibility for like a bearish target. The idea of $1 as a bearish target is not unique to AMC. It's very common in the market. So for me to check it out and see if that was even possible, it's really significant to me that that gap value down here at like $20 back to the top, if you double that, it basically takes you to $1. Like that's a really significant number. It doesn't matter if it gets there or not. You can't deny that that's there. It is. So what I'm saying is if you go from the all-time high to that reverse split value like the day of, and that taking it down 50-50, it takes you right to $1. Does that mean we're going to go to $1? I don't know. It's just there, right? When you look at this on the grand scale, you can see why I would be concerned about this though, because notice that this particular trend here, you guys are like, what is that line? That line is actually that is the wave, or that is the sign of weakness line rather. So this is the line that we caught when we jumped up in May. We caught this twice. So I actually anchored this to this yellow line you see on the chart, and I'm adding a bunch of stuff. You guys are probably like, stop adding stuff. It gets your chart real messy. I know. But I want you to know this is really important, okay? So this wouldn't be the first time we've touched this line. And when you go back and you look at this, I think without making too broad of a judgment pass, I think this may actually represent like a main creek, kind of like a centerfold of the wave. When I went back and looked, it's crazy, but this goes all the way back to the all-time high. So I know this is a little off, but this actually hits the all-time high. Okay? So this marker that we jumped over in May and had this huge explosive move, what it's starting to read to me as is it's the reaction from this drop. And I thought that that might be the case, but I also thought that we were lacking some. So I don't know if you guys recall me doing this, but I did some measurements back in the day where I was like, oh, if you take this and you move it up, you should get the adequate value, you know, of this drop. It should be the reactive move. It got pretty close, but it wasn't quite there. That was some of the analysis we were doing really early on when it first ran up. And so we had this idea that it might be very similar. This comes from like all these breakdowns, these like high heel things that we talk about. You call them shallow S-curves. Now I've been calling them stilettos because they're kind of fun to talk about like that. This is what it looks like. These motions happen all over the place in the market, and they happen on AMC a lot. And they're basically like, if you drop down really hard and then form that stiletto, usually the reaction is very equal to that first drop. And it's almost perfectly like equal sometimes. And then sometimes it has to do with a trend, like there's clearly a trend here. But other times, like a parallel down. But other times it doesn't really make a lot of sense why it's doing that. It just does it. So like this happens, again, all throughout walk downs. It's where you're getting this kind of equal and opposite reaction. Probably has to do with who's in charge and what they're selling and what they're covering and Maybe they're opening a lot of short positions and then covering short positions. I don't know for a fact that that's what's happening, but I would say that that's consistent enough that we could use it on the big picture. There's dozens and dozens of examples of it. And so I had done that originally when we first dropped in, and I thought, well, we should have a big reaction back to the upside, and I would count that as our auto reaction. But the issue was that even in extended hours, I didn't think that this actually came high enough. So I had in my mind, this is where a lot of this originally came from, kind of dissecting my own beliefs about AMC for you, because I want you to know, like, this is where it came from. And this idea that this is the range did not escape me. So, like, when we talk about this as a range, that's another thing that is, like, again, it's almost inescapable, because here, and I'll show you, because this is, again, we're talking about supply and demand, right? We're talking about where are we going to go if we do go back up, where will we maybe go and stop, and that's really important. And we've been talking about potentially going really high. We may not go that high, and I talked about this green S-curve, for example. That's just one of them. I'm going to leave that one on the chart for now, because I don't know, do I want to? Well, I did like 4 of them. Anyways, the point is that this measurement is the same measurement. And so for me, I'm like, okay, what are they trying to do here? I think they're trying to define, in my mind, I'm thinking like, well, they're probably trying to define a range, right? So what this does is it goes from the drop point up here to what became like the liquid center right here, which you can see as a supply-demand line pretty clearly. So like I said, it's elementary, right? So when you look at this drop and then the walk down becomes this reactive thing where you're looking at this from the point of view of an operator. You might say like, well, it seemed kind of pre-planned that could be the same value. Well, I agree, you know. You're basically offsetting your chart. You're pushing, you know, from where you were before, you're kind of walking it down to a place and then you're going to build that out. And it ends up being the same value, right? So this could be perceived as like the valuation change. Like this could be the shift value if you want to go that route and say like, I think this is just the value that's ascribed to that split and nothing else. And then that makes sense of the rest of this because again, if it's proportional, then in theory, like you could take this whole chart, I'm not saying you should, but in theory, you could take this whole chart and place it back up here. Weird, right? But totally possible. And if that's the case, then we're not like actually making lows that are super significantly too low, which again makes some sense. We're actually just kind of dipping below previous bottom, yada, yada, yada. I think that's a credible argument. We kind of made an argument about this early on that maybe that's what's happening. It's challenging because this silly thing doesn't scale right. It's challenging because in order to make that work, you kind of have to read the chart shift, not as irrelevant, but you'd have to kind of go back and look at this like this, and I think that would be really challenging. Like, I don't know if I could do it. Maybe this is part of it though, you know, maybe this is a part of this whole thing is like, there's something to do with this original chart value. That's why we're not getting like easy to read numbers on like maybe where these resistances are. That would make a lot of sense though, if you put it in the right spot. It makes a lot of sense of a lot of things, you know. This looks like a retest, almost like a gap fill. All I did is scaled it appropriately. So what I did is a percentage-wise scale. So if you're wondering, like, if I fudged it, I didn't fudge it. I just took this from a scaling perspective, made sure it was the same. That's the same percentage on this logarithmic chart. And then you can just put that right back here. You can see that it would actually come back up and fill that gap. So I've done the measurement correctly. And yeah. this would be thought of as, so it's bizarre to think about because you're like, well, wait a minute. So that's the support that we're sitting on way up here. I don't know. Maybe there's some kind of a magic, formula to that. Maybe this has to do with the wave down. I think it's interesting, nonetheless, because that wave that we built, I think this goes out to September 2025. That wave that we built is fascinating to me because when you go look at where these interactions are on this wave, it's very similar to what you're seeing horizontally here in terms of like catching and all that stuff. Anyways, I think it's fascinating, but I digress. Point being that the reason that I'm even bringing this up is because when we did the analysis on those S curves, there wasn't a whole lot there to indicate that you would necessarily break out. It doesn't mean that you can't. It's just that you wouldn't necessarily think, oh, I have to break out. And one of the ones that we used was that green one, which I have on the chart. That one's kind of high, and then we've got some others. It gets a little crazy. I did like 3 of them, right? Maybe I should have like brought them all out of that so I can see them by themselves. I probably just built it and then just sort of decided to tuck it all away in a single group, but I'll put them in their own category so you can see them better. I think it's important to see them is what I mean. So we want to see them together. So then I'm going to take these S curves and now it's kind of like, oh, well, they're not actually green, but I'm not going to change the name of it. Right. So these were the S curves that we came up with timing wise based on what we see as the breakdown here and then the 2 anchors, the 2 quad flushes on the top and the bottom. They're fairly simple to find. So these are the 2 S curves that we build out. And I think that when you look at this, again, with that perspective, it's pretty easy to see maybe how these might play out. Could be a variety of things, like a combination of them. Obviously these all start on the same point. They don't end on the same point because it has to do with how it was built. And I'm not going to go through the math all over again, don't worry. But these were obviously ones that you could see as potential moves to the upside. But what's interesting is, of course, none of them actually indicate any real breakout is imminent. So one thing that is important to note is like where these ended up. I don't think it's insignificant. These would point to, again, like supply demand levels that you would expect. They're not exactly like out of left field. They're all pretty sensible. I don't think that any of them really felt out of place, out of whack. I thought all of them looked pretty decent to me. Like they looked like they represented, I'm gonna lower that one a little bit. It may be a little off. But they look like they represented levels that we've previously gotten stuck on. Like the 570s is definitely one, 565, 570. 6, obviously, that's just a round number. And then 530, 532. That was a really important level for a long time in the early days. I think all of those represent some of these initial kind of drop levels coming down. And if you look at the span of them, they just ultimately show you that all of them are kind of going into this little pocket here. And that's it. So why is this a problem, look-see? And does it mean we don't get to see 8s, or does it mean we don't get to see this or that? Again, I think that when we look at the big picture, it was easy enough to see why this could have been the supply top, because you have I'm kind of trying my best to bring it all together. I know it seems like I'm kind of jumping around, but really what I'm doing is just kind of looking at all the different things that we've looked at this year. And I'm not including like that massive wave that I did in that video that I described. But I kind of assumed that this was the place you were going to go. But in reality, this didn't really act like much of a supply at all. Like we hit it. Yeah, we went and checked it. No doubt about that. We even pushed it a little bit. But ultimately, like it didn't stay there. We walk down supply zones, like we walk across them. The dominant supply was 532 to 605. And it seems that most of the early advancement Remember we had those indications we might advance early. Where did that happen? Well, it happened right there. And then there wasn't really any other time except at like 5:20, and then right here, the first big breakdown at 5. These two little points right there, the only other times I really felt like it could go back to the upside with a lot more strength. And that's kind of the bottom of the barrel. So you have essentially you have three tops here that are showing those same markers. They're almost in perfect succession. Succession. And those are the ones that I think we're going to see that's where the S-curves have formed. So those upward trajectories that are fanning are really pointing towards those three. So when I look at that, I'm not particularly surprised by it. It's just kind of like, whatever, dude. It's just previous tops. Yeah, but the fact that the S-curves mapped out really well to those places is important. And then the timing of it is also important. Like, one of these is December 18th. That's pretty soon. That's the steepest one. That goes to 6. That's the Jim Cramer number, right? Sell if it gets to 6. That's what he said. The other one, it's like mid-January and then late January. They're pretty spread out. So these aren't exactly like easy to digest numbers because they don't look very promising. They look like really slow-moving numbers. One of the things that I've talked about, so you might be looking at this like really discouraged, thinking, well, great. So you're saying it could go up here, but then it may just break down. Yeah, I mean, maybe. Like, I don't know. That's definitely a possibility. You could see that as a large cat ear. It's not complicated. It's simple. Like, it's got a gigantic wave up and it doesn't advance. We've talked about this before. So before you get like discouraged, just know that this is not really any different than anything else we've ever seen. Normally when we do cat ears, we don't necessarily expect them to go really low, but there's always a point of contention at the end, which is important to note. Like, this never runs unless what? We've talked about this like dozens of times. Okay. So if it's something that you're like, I don't understand, well, pay attention because we've talked about this a lot. This motion right here is the motion that you get that breakout and you advance. I talk about the M cross a lot, and that's the cross to the upside. This is kind of what you see if you go back and you look at January to June run, right? That May run up. That's what it looks like. You do see it elsewhere. It's not only just there. There's other places. It breaks out like this on the small scale quite a bit. It's very simple stuff. It could do a little bit of a spring action right here first. That's not unusual. It could have like a phase B top that's a little higher. That's also not unusual. Okay, totally normal stuff. All of that is just different variations of the same concepts, which are Wyckoffy accumulation or reaccumulation if it's coming from the upside versus the downside, right? None of that is particularly new. But this idea of the cross at the end, I think it confuses a lot of folks because I've said it before, like when it doesn't cross up, then the only thing remaining is down, and usually it's going down to either get a spring or to break down. So when we had this rejection up top, this is, in my opinion, like that second wave on that cat ear, right? We had that breakdown up top after the 13th. There's almost no way you're not going to come down for a spring. All we were really debating at that point was where is the bottom, and I was wrong. I thought it was pretty high. I mean, PNF had a bottom at 460 that looked good. A lot of people said 430. It ended up being basically 4. It came all the way down, and then weirdly, it kind of sat on 417. That's a strange number, right? We saw the 415 hit in after hours, extended hours. Point is, in order for this to now continue, it has to be a spring. Otherwise, if this is like an LPS and you don't cross the creek, usually, right, this is what I would expect, then I'm going to make it a little steeper so it compares a little better with what we're visually seeing on the chart. Then it just basically becomes an LPS and you just break down. In order for this to be a spring, it has to do two things. So it has to breach the bottom, which it did. It has to find, well, maybe 3 things. You guys are like, there's a lot of things, Booksy. I know. It has to go through the bottom, it has to come back, find support, and then it has to jump the creek. So we're in a scenario that's more like this right now than the other two. And all three are possible every time you form a range. All three are absolutely possible. So when I look at this, I think about the nature of this build. This to me doesn't look bad if it holds, okay? But there's another step, and that step is the one that I guess I've kind of omitted a little bit here and there. And it just depends on how you draw this line. I don't want to get too deep into it. I'm going to try to make it look more similar, I suppose, to the one that we're on right now, so it's not as innocuous and like weird. I don't often like talk about the M cross in reverse. So I usually talk about it one direction, which is up. And we talk about it down, like if it breaks down here. So there's two M crosses of note in this little diagram. One is this way, right? Which is just a failure to hold, and then it comes back up and rejects. That's an M cross down. And then the other is an M cross to the upside. And that's crossing this creek. But there's a third one, and that's the one that is the most bizarre because we would just call it the SOS. So, like, I always talk about this SOS as a Wyckoffean would. Sometimes I've mentioned this, that, yeah, it should hit, like, the top of the range, but it's a triangulation of points. So, like, usually, like, right there. It's usually between these top 2 points. Here's the last M cross, right? So an SOS needs to kind of advance, and it can have a big backup here. That's always a possibility, backup after an SOS, but I'm not going to draw that out. That's where it comes back down and checks the creek. I guess I will draw it out. And then it goes again, and it looks really ugly, but it's fine. That's an SOS with a backup. Sometimes that happens. If it doesn't happen, then it usually is pretty straightforward, like simple. This would be where it is, because in this case, the creek's really low. So what we've done so far is we've essentially like been able to identify that we've hit very clearly this red line. That's an obvious one. And this is like a 1, 2, 3 triple point hit, 1, 2, 3 right there, and then it hits again and it breaches it. That's a good sign because it went above it. I think that's important. I don't like that it sold off as soon as it went above it, but that's where the supply was. It was waiting. I didn't really expect there to be a big push, you know, beyond that. I would have been surprised if it didn't come back. So now we're backing up, probably going back to check the creeks down low. There's a gap way down here at 450. No one should be surprised by that, okay? On my regular chart, what I noted, which I thought was of interest, is that there's actually like a really low creek jump, which is down here. So this is bizarrely low. It's at 440. And so we could technically like come all the way back down almost to the bottom at 420s and still technically be above the creek, because it's a really bizarre move. I do think that creeks are flexible. So one thing that I would note is, yes, that's true that that is there. There's also a possibility that this is used as the top, since this is where it pushed up. There's a 1, 2, and a 3. There's 3 push-ups here. So it's very possible the creek has been raised and doesn't need to go that low. That's kind of where our creeks stand right now. Like they're pretty, I'm going to make them dotted lined, I guess, or something. They're pretty low. Like we jumped over them. We tried to advance. It started looking really weak yesterday. Hopefully you guys caught that, but if you didn't, you know, I don't know what to tell you. I wasn't holding on to my stuff. I was like, going into Friday last week, I was like, it doesn't look like it's going to keep running to me. So I said in the Discord that I actually exited some of my short-term positions because I didn't feel strongly about them. Mostly like the 4-5 contracts that I had. It's not that it couldn't run. It's just that I was making decent profit. It was like 20%. It wasn't a lot. But I made decent profit on them. And I was like, it doesn't look like it's going to run without a pullback. So I posted it in the Discord group that I was getting out of some of those positions and the trading channel on there because it just didn't look strong. All right. So I'm coming to it today telling you that I don't really think any of this looks bad. It just looks like it is what it is. But what I'm trying to explain is that we have to have an understanding of like what needs to happen and where those supply levels are in order for us to understand like it may not be quite as we think it's going to be, you know, meaning that like the way in which we're traversing this region might seem really obvious, but I don't think it's that obvious. So there's some elements here that are missing, and I was trying to like illustrate that. I probably didn't do a great job, so I apologize. You know, it takes a minute when you've been on break to get your brain back into it. Funny enough, though, I kind of did this because I was with my son yesterday quite a bit, and you know, he's been home for the break. He's really young. He just turned like 9 or something. He goes, or something. What's wrong with you, Booksy? No, he's 9. But I was with him over the break, and he started asking me questions about the stock market. And if you try to explain the stock market to an 8-year-old, you can't sit there and talk about creeks and, you know, Wyckoff, and you can. It would just take a really long time. He's very math-minded, so it's easy for me to talk to him about it. And I'm talking to him about supply and demand. He seems to get the concept pretty well, you know. He seems to understand it pretty well. There were things he was confused about. He was asking about bid and the ask, why the price changes, if people think it's valued at this, why does it change? And I'm like, because not everybody agrees, and yada, yada, yada. But it got me really thinking about, because I was doing this chart, I was like, just taking it really simply and just saying, look, there's a supply push here, right? And then it becomes a demand. So this idea is very, very straightforward. And then there's a supply push here, right? Where you're kind of pushing, but you're not advancing because there's supply, too many sellers, right? And then it should become demand. And this is where it kind of occurred to me that we're not seeing that same kind of like gusto, perhaps, that you might expect from that kind of a break. Again, this is a long-term one as well, and this break's like huge. This is long-term, and it doesn't break huge. It's kind of just sitting there, and it didn't go into like an SOS immediately either. It just kind of piled up. So I'm like, so what's missing, right? And that's kind of where I'm at. That's why I wanted to kind of revisit all this old stuff. So I was like, there's stuff that's missing here. You guys are like, why were you even talking about $1 then? Because it's coming up on the anniversary of that video, and I think it's really interesting to look at this build out as if it is bearish and say like, well, where could it possibly go? And a lot of people don't think $1 is possible. I still think it's a target. I don't think it necessarily happens, but it's an easy enough target to find. And then I also think it's interesting to look at this as a potential case study where you have a different supply zone than maybe is expected, because we're thinking like, well, it should go up here because of all these other checks and because it measures out really nice and you could get the gap fill. Yes, it does. Totally does. But if this is not quite as we think it is, then it could actually be quite different. So anyways, one of the things that kind of struck me as odd was, again, that I couldn't find and identify the same supply zones that we had here, because these, I just did the demo a few minutes ago. Wasn't the most clear demo, but what I was saying is that this breaks down and then it forms supply really low, like the selling happens really low, and it doesn't actually ever come back up. This is what was the point I was just making, that doesn't actually come back up to the top. So the expectation that we come back up to 12 or 13, it's consistent with just the bottom. Like if you just measured this area here, this range here, it is consistent because this comes back up to the top of the range. It's not consistent if you think that this is the breakdown level and it dropped low. It doesn't make any sense. Like, why would you don't go back up to the top. You never go back to this level until 2 years. It's a 2-year cycle, May to May. You don't come back up to it right away. So it's like, I couldn't really put my finger on that at first, and I was thinking like it was 1-to-1. And I think this is just like an error on my part, to be honest, because there's a disconnection there, right? Like this does match with our current setup, but the problem is if you use this as a top, it's like really nice. It looks really nice down here, but it doesn't really make any sense of this push-up, because this push-up doesn't this one doesn't go to the top, right? Okay, so my point in all of that is that there might be an element of this that's misleading, and I think it's that big push, right? And so when you go back, then you have to go back and look, where the heck is this supposed to be then, right? And I think you could argue that it's right here at 612. So I don't like that. I don't like that it's where it is. But if I'm being completely and totally honest, I think that's probable that that is actually the point. And if it's not 612, you could argue that maybe it's 760. It's difficult for me because I look at this and I'm like, well, it's so similar. Like this is very similar to this, blah, 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 blah. It is, but then it's not. Like, because this obviously didn't come up that high. You can't one-to-one it. If it's not one-to-one, it's not one-to-one. So you have to then look at what ultimately, from a supply-demand perspective, was going on back here. And imagining it breaching that and then coming back and checking it might be more a better way for us to understand. So hopefully that ties it all together. Would be a better way for us to understand maybe what happens, as opposed to it's got to come back to some parallel or something else. Really, it's just coming back to that marker. That's the chosen level to sell, right? And we don't have a great one. Like, that's what I've been trying to push at here, is like, it just doesn't seem really obvious. There's 3 here, and then you can look at it and you can kind of make an interpretation and say, well, maybe this 655 is another contender because that's where the hook happens. And I would agree, that's a contender. I think it's a harder case to say, except for this big push-up, which is what I was looking at, and then the overall motif of this big push-up compared to the second push-up. We've already done those charts. Those still exist. I'm not throwing them out the window. They're just there. It still exists as a possibility because of the massive influx of volume that happened here. Maybe there's a greater push that happens. But in reality, I don't know if like we did get this, but ultimately, like, what was the intention here? You go back to that May 15th, 16th top. It's not up here. It didn't hold. It didn't sell at all up the top. It just sold all the way back down, and it ultimately generates a hook right there beneath 652. And so I think that all of that being said, you guys are probably like, what the heck's he going on about today? All of that being said, I think that there's a simplicity to this that I know it sounds weird, but it kind of feel like maybe Jim Cramer was just sort of like light bulb went off. Like, sometimes simple is the correct answer. And I'm not, you guys are like, he's paid by Jim Cramer. I don't even know Jim Cramer. I've never met the guy. You know, I'm not some news pundit. I've never been on the show, whatever you guys want a tinfoil hat about. I will say this. I don't discredit people's opinions just because they're not necessarily popular, right? So his opinion is not popular. The idea of, like, if it gets to 6, sell. That's not popular. People get mad when he says stuff like that. They get mad because they don't want to sell, some people. And then other people get mad because they want to go higher. I just kind of thought about it and I was like, well, I don't know. Maybe there's credibility to that. Just because it comes from somebody that you don't necessarily like does not mean that it's wrong. That's silly. And the more that we kind of studied it, the more I was like, he's got a point. It's a very simple point, which is this is the supply zone. And if you look at any analysts right now out there, most of them are saying like 450 to 6 is your range or whatever. I think a lot of it, again, just comes back to a more basic understanding perhaps of this setup as it is. And maybe, again, this is why I'm presenting this, maybe it's in theory correlating to what we see here. And if you go back and you look at this, you didn't think I was going to do that, did you? You guys are like, no. It would make sense to come back and sell here. If this didn't actually run the second run and we were right and it ended up not going, so we were kind of thinking that that could have been on the 13th. It didn't happen. It went low. So instead of going high and then doing like a flush down, right? Had that happened, I think if you look at the levels, we'd probably be thinking it's pretty similar, you know. So when I look back on it, I'm like, you know, maybe there's a bit of a conspiracy theory idea there that we're really higher or we should be higher or whatever. I don't think it's conspiracy so much as just mathematics of a shift. I think the chart shifted because the valuation changed by some increment, right? And then he was like, it's 10 to 1, Booksy. Yeah, but there was two values, so it's not, I don't think it's actually 10 to 1. I'd have to go back and look at it, but there was like two shift values because of the ape and then the reverse split. It was not perfectly like 10 to 1 or something. Anyways, but yeah, looking back on it, it's like this could have very well been where it is up here on this chart. And if that's the case, then that breakdown level that we're talking about, that 6.5, it actually makes a lot of sense. And you could see this as a number of things, but one way that I look at it is sort of as is, as a chart shift, is that this break value on this reaction may be done. So we were kind of thinking it might not be done. It may be done. So I don't necessarily think this drop, this reaction are over, but I think it's a possibility. You could argue it, and I don't think it's necessarily wrong. Okay, so this could definitely be that reaction to the upside that we were expecting to have happen, and that there's not a secondary reaction like there was back here. The secondary reaction was easier to argue before because there was a setup that sort of favored it going to 13s, and that would have fulfilled, in my opinion, like that move in a much greater way. So what I think we got is, I don't know how exactly this happened, but I think what we got is that this essentially is the reaction, the auto reaction to the sell down that happened, right? You're like, well, no, duh, Booksy. But I mean like a 1-to-1 kind of thing. Like somebody unwound positions. We know for a fact that Vanguard sold off like 60 million shares. We don't know whether they opened short positions or not. But if they did, they certainly would have made a ton of money closing out a ton of short positions here. Certainly is possible that that's what happened. And volume is volume. People say whatever they want about buying and unbalanced volume, but volume is volume, right? So it can be butchered to made to look a certain way. But ultimately, like, it'd be easy to argue that a lot of that was some kind of short covering volume, you know, from maybe this early drop, right? So the shift value happened, then it's covered. The rest of this then becomes a battle of where are we, you know, in the grand scheme of things. And I'm not changing my mind about any of this as a bottom. I'm not changing my mind about that. I'm not saying it's going to go to 1 and then just sit there, or it's going to go bankrupt or this or that or the other. I'm not even arguing about those original lines that we drew. I'm not saying those are wrong. I think they're right. I do. Those original parallels that we were drawing. I think there's other things going on here, like as indicated by that cat ear drop, that I probably would have done well to identify like earlier. Like this right here is really significant. The fact that it came back and hit that, you know, is very significant. And then the fact that if you continue that logic straight through, you know, to its conclusion, you may not like it, but you have to kind of just contest with it, that ultimately, like, this goes to essentially intersect $1. You guys are like, well, that sucks, Booksy. You didn't need to tell me that on a supposedly happy day, right? Well, kind of $1, right? It's like $1.50 on this one. Okay. I'm not here to like present scare tactics or anything like that. I'm not. And I'm not here to tell you that you should or shouldn't sell. But what I do think is that when push comes to shove, if we only look at the high targets and you only think about Well, Booksy said 869. It's got to be 869. I don't know, man. Like, there's a lot of debate now in my head because of where these line up. And I think that logically speaking, that shift value, to me, this is a pretty straightforward like possibility. Yeah, I wish I could draw it better so that we could have it more clearly on the chart. But suffice to say, I suppose that if I'm looking at this value here, I'll change this one to like white or something. If I'm looking at these values and I'm looking just at the chart shift, this marker here, which you can see where it indicates, and this marker here would be essentially like 1-to-1. This is a bizarre chart, right? It is weird to do this kind of analysis, but I find that to be really significant. That's essentially the same level that we see here going into December, right? Because this is December 20th, 2020. Back here. And it's coming back and revisiting this level, which if you do the chart shift correlates to where it is right here. It's $20, right? Which correlates to exactly where this breakdown is at 653. So I would be very, very, very aware of that if I were you. And I would be very cautious about that level as a possibility for essentially like an upthrust, another upthrust. Instead of assuming that Booksy's original math is right and that it's going to do some kind of a 50-50 swing and yada, 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 that it's much simpler than that, in that we're basically going back and rechecking the same level we did in 2020 before we dropped low. And at the end of the day, when you look at this big picture, what do you see? We've talked about this before. What this essentially boils down to is an M cross down. I mean, this did go really low. There's no doubt about that. I don't know if it would have been any easier if it hadn't gone lower. Maybe it would have been easier to see. But what this essentially is straightforward. Like it's a walk down. And I've talked about this as an iteration because you can make the iteration here, here, and here as iterations go. They're copy and paste within themselves. So this is all part of the same thing. That's the iterative motion down, right, to that bottom. So these are just wave down, wave down, wave down. And it's weird to think about that here because it's such a massive move that it just doesn't really fit, does not compute, right? You're kind of like, and there's no secondary action. So you're like, what the heck happened, you know? Well, if you think about it in terms of just waves, this is a wave right here. This is essentially just an M. So you can make it complicated, I suppose. But let's say, for example, this was the secondary action up to 650. I think it went there in like extended hours, right? That could be the secondary action that we were looking for. We thought it didn't happen. Weirdly enough, it could have been right away. And then the rest of this is ultimately just a, you know, essentially like a walk down to try to get back to some value low. Did it go very low here? No. You know, and I don't want to sit here and like talk about every single theory in the book. We've talked about a lot of things and different ideas. And that one chart that we had that we did like a week or two ago, that one was particularly interesting because it did imply that you came up here, but you didn't actually go that high, and then you actually build out here a bit of a range, and then you go later in the year, you know, up to like 8s, and then you come down. And that's a really interesting thought as well. I don't think that's way out of left field either. So there's this concept of like, hey, if you're going to come back up and sell, it could be really, really fast. It could just be this big pop that's then followed by this nasty kind of slide to the downside, right? To come back to some level, you know, 350s, 2s, you name it. That's certainly a possibility. But there's also a possibility that you sell off really slow. And a distribution that's slow, we've seen that before. You know, it's actually what happened up here in October. of 2023. That's like an example of kind of a slower distribution where you get this like initial push up and then it builds up support again and then it pushes up again and it goes higher perhaps on the second push. It happens quite a bit. And then you drop. And this was something that I didn't even really consider until we looked at that other comparison about a week or two ago. I think it was like 2 weeks ago now, because I guess I was awful last week. So yeah, so this is certainly a possibility as well. It's not like, oh, so you're saying we're never going to go up high. We're never going to get above sevens. No, I just think that it's very possible that this is actually the supply level and that there's not really much of an intention to go significantly higher than 6 to 650. And if we did, it might have to be sort of like a secondary action, like a UTAD type deal within that structure. And seems very possible. So what I'm looking at this week is not actually that do or die. Some of you are like, well, that's crap, you know. What I'm looking at this week is like, where are we now and what would have to happen next in order for us to see continuation? And where are we now is we're kind of in this mode here. We're back. We haven't even left what we call like an LPS yet. We have not advanced to SOS level. We have not advanced to any kind of a major sell down level. We're kind of hitting previous ones and we're checking them. This is very normal for the market. So if you're looking at across the aisle here, it's really, really common that the levels that you checked on the way down are the same exact ones you're going to check on the way out. And ultimately, you need to find support on those levels. So going back and looking, again, making it as simple as possible, you can take this and you can go backwards and look at where did we have supply, where do we have demand on the way down, what levels broke down, where have we held, what have we checked, what have we not checked, kind of thing. So some of the levels that acted as supply, I think the one that I'm most concerned about is down here around 450, because this was a supply zone right here back in October. It dropped from it. We really rejected it twice, but we made that double bottom, which I said arguably could have been very bullish, and it ended up being true because it just didn't fit the bill for a weakness. It wasn't a sign of weakness. And so it comes back up, makes a higher low, and then it advanced over the creek finally. This correlates a lot to where we see the creek now. So it's down there at like 450s. You know, someone said max pain earlier is like 450. Sure. You know, I mean, it's easy enough to see why you could do a lot of this nonsense and kind of keep us in check. There is a kind of a presumption here of maybe a little bit of a, you know, a rotational symmetry on this. So coming back again to 450 might make sense. And some of you guys are looking at that like, uh-oh, what if it keeps rotating and it just goes down? Well, it could happen. You know, that's why I think that right now, the best thing to do is probably just to look at this as simply as possible and say like, look, it seems very logical to me that it would come back to check 450s, maybe at lowest down to even 440, because there's a really low creek kind of width here. It could come pretty low, you know. There's an uptrend as well. So I know some of you guys are like, well, just look at the uptrend. Yeah, that's not really being tested yet. I would probably use this higher one there as sort of a basis for maybe like how far this could go. And you can see that if this walks down really slow, like it could be until next Friday. You know, that doesn't really bode well, does it? It doesn't make you really confident, but it is what it is. If that holds, there's no reason to think it's going to do some kind of a whip around and start going lower. So the assumption that this is going to continue as a breakdown, that's not necessarily true. Rotational symmetry does have a stopping point usually. It doesn't just keep rotating forever. So you might see that as a wave up, down, down, up, and then down again. Again, I don't really think it matters that much if it's like not perfect. That's about a 50% retrace on this major move up. Remember, we never made a lower low. So even though there was a kind of double bottom in that 417, we never made a lower low, which means you can still technically look at this as all one move. And so if you look at the retracement here, 457 takes you close to the gap. between 450 and 440, 440 is the 6.5. So I think that's probably right. You know, and again, that correlates to a supply zone from the other side that really we haven't checked. You might think we have, but we just haven't. It's not been tested. Only thing we did was confirm it right here as supply, supply, supply. This is the only time it became demand, but it hasn't been back tested. So I would love to see 457 and not go below that. I'd like to get there sooner than later. Maybe hold on this curve, this yellow curve. That'd be nice. At worst, I think you could see 440. This is what I put in the Discord group. If you're wondering if it's the same numbers, it's the same numbers. I said 440. It could come back to, I said it yesterday, not today. And then I said it again today because people were like panicky. And I was like, nothing's changed. Still 440. It's not there yet. So short term, that to me seems right. It could come as low as, again, maybe as low as 440s. Okay. And it would be okay. It wouldn't be great. It would be okay. Because again, remember, even though this looks like it would break down this like steeper creek, it doesn't actually break this other one. So there's still that. So I would venture that these are highly probable targets. Okay? That's not me telling you to open up a short position or something. I'm just telling you like 443 would be magic to me. And I don't see that as a bad thing. Now, going a step further, if this is indeed a single move up and then down, you can do a fib extension and just see where it goes. We haven't done too many of those. We did a 1, 2, 3, remember? And that looked like it would go up to 550 maybe. We haven't done like a larger one. You go to 443 and you can see that a fib extension of 1618 gets you up to 670. So there's quite a bit of line work here. Might be a little confusing, but one of them lines up pretty well with 615. That's right here. That's the 1272 and the 1414. Usually find that those kind of go together if it's like a lower move. A single move here on one would just be 572, which again is right there. My bigger question always is like, is it kind of like lining up with what we already have? Like, what do we already know is a supply demand zone? And you tell me. Like, does that kind of line up with what we already have? Yeah, I mean, it does. So even this, even though it might not look quite right, look at where that 1618 goes to off of, I picked 443 because that's the 618 retrace. It could be different, but look where that goes to. There's a gap there. Yes, there is. So this had a closing value of 674. That candle closed at 674. This next one opened at 669 and it only went as high as 670, which means that this 669, 618 value to 670 is very likely. JP. Because if this is one large wave, then it hasn't actually finished yet. Why does it have to keep going down to retest anything? Because we didn't check the creek. How about that? Show me the creek check here. I mean, it just so happens there's a gap. That's there as an extra evidence, but there's no creek test here, guys. This jumped up and then it broke out and it didn't come back down. I think the first thing that I said when it came up here was I thought it was going to come back down, and it didn't happen. It went up to here and I said, oh, I think it should come back and then it can advance again. That was like the first thing I said, like Monday the 25th, go check it out. I'm positive because I remember talking about this possibly coming back to hit that and then advance. That never happened. You cannot just leave unchecked resistance. That's what we're talking about. Like if it was a resistance and then it gapped up above it, they didn't test it as a supply, or excuse me, as a demand zone. you're going to have demand and they're going to go back down to get that liquidity. There's going to be people who didn't buy here, right? And they're going to go check it. And if it doesn't happen now, it will absolutely happen later. The fact that this level coincides with 457 level, that coincides with a 50% retrace on the bigger move, that's a big deal. The fact that it is essentially like the 460 level, which we talked about as probably the most significant, I still think it's the most significant support zone that we have on AMC. It's like 465 down to like 457. This is the most important support that we've had on AMC on the bull side, right here. So you can look at that and say, I don't think we need to go down. I look at that and think, I would prefer we go ahead and go back right now and make sure that that's good. And this is ultimately like your platform. You need to have a strong platform to jump off of. So for us to hit that level and bounce would be really, really strong. That's why I just did a Fibonacci extension on it. And I'm telling you, the Fibonacci extension literally goes up to like 675, which is this gap right here. That is very, 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 very good considering we just spent, I don't know, like an hour talking about how this is probably the level that they're trying to get to. Am I right? We just spent like an hour debating this. So you have a waveform right here that could lead you there. You have a trajectory target that leads you to 610. You have a Fibonacci target if it's an extension, if we do a 50% retrace, that can get you all the way up to, or a 618 retrace, if we dive a little low, that can get you all the way back up to, that's another good one right there. Either of those touches right there. There's no back test on this. That doesn't matter. That's not what we're talking about. We're not talking about going back and trading it. We're talking about that's building out right here as what? Probably mostly as supply and a little bit of demand. The problem is you can visually see it on the chart. There is no back test to this level, period. I know we spent a month down here. It builds out a liquidity shelf of supply and demand, of selling and buying, but there is no check on it. We just took off and then we're just sitting up high. We just rejected. We haven't checked the creek jump. So even if you're like anti going back to the level, like where's the creek test here? There isn't one. You know what happens when we don't check our creek? We get screwed. Like really bad. There has not been like a single evidence on AMC where we've jumped a creek and then not come back later in really bad fashion to come back and check it if we don't check it right away. Here's an example of one if you want one. And this even like did a slight check on it just like in our current time frame. This is, I'm not going to belay the point, but this is why I got banned from my own Discord group or kicked out of my own Discord group. There's a lot of reasons, I guess, but this was one of the reasons that I got kicked out was because right here, when we jumped up, I knew we would come back and go to 9 because we hadn't come back down and checked that level yet. We had a resistance there that we hadn't tested. And then when it started breaking down, you know what I said? I said, we're probably going to go to 6s, and I got laughed out of the room. And there was a lot of people that were laughing about going to 6s. Why? Because we never checked the creek. You can't leave and expect that somehow that rule doesn't apply. It always applies. Always. Without exception. It will come back to bite you later if you don't do it right here. If you don't spend an adequate amount of time. And that's why I don't think ultimately we're going to leave without coming back to like 2s and 3s. Because I think the more time we spend up high dilly-dallying, essentially, the farther we're going to drop later. You know, this is not like me drawing this stuff here does not imply like, oh, it's just some idea. Like, no, I really think genuinely like this is a problem. Like the fact that we jumped over here, yeah, we checked it. That's enough for a run. once it checked it, you could get the run, but this is never ever left. Like the TA is not going away just because you don't want to go back down low. So that's the whole basis of all the stuff that I've been doing. So like, I mean, it's not like we could disagree about maybe that it runs first and checks it later. I'm okay with that. You could say like, I don't think we're going to go back now. We're just going to keep going. And maybe later we'll come back down. That's fine. I think that's a reasonable thing to say considering it happens. But the basis of all of my TA has been this. Like, this is what I talk about on this channel. So I talk about creeks and jumping creeks and checking creeks. That's where the best money-making opportunities happen anyways. Not like on the peak when you're going into overbought territory, you know, on a parabolic looking triangular move to this resistance. Like that's not a good time to trade and buy in. Best time to buy in is after this retracement. If it bounces out and breaks this local creek here, that would be an awesome trade because then you've got a really good chance that you're going to make, I don't know, 53% move. That's a super high probability or high yield move. So I get like the idea that you want to just keep going up, but stocks get exhausted. You know, we're sitting on really overbought territory right now. I think it would be good. Even on the daily, it was getting close. 4 hour, it was already there. You know, I think that you could look at that and say what you want to say about it. I think it needs to chill out a bit. Now, is there other alternatives? And I know that, Jason, I see your request. I'm going to do that in just a second. Are there alternatives to that? Sure. Like, this right here, for example, might be your alternative. You were just pointing that out. Probably would go for, I don't even know. I'm not sure where that would go to. But I guess if you just wanted to use that and say that this pushed up the creek, you could argue that this is going to hold that creek up. I don't think that's a bad argument either. If you wanted to argue that there's a creek here, I suppose it's possible. But it'd have to prove itself. So like right now, it's just opinions, like it's our opinions about it. You'd have to say that you think this is going to build out a reaccumulation right here, and then go again. And that's it, right? And that would be the end of it. If you think that, that's fine, but we're not there yet. That could take all week. So maybe it happens today, maybe it happens Friday, maybe it happens Monday. But between now and then, there's a lot of chance also that this doesn't hold, right? And you've got a pretty clear shot towards a 50% retracement or a 618 retracement. That's logical. I don't know about you guys, but all I see here is sell, sell, sell. For 3 weeks, we saw candles underneath that creek. I want to see it come back down on top of it, hold it, and then push. I think that's the best chance that we're going to have of like a big move. So agree or disagree, it's okay, but that's where I'm at right now. So I think that happens pretty fast. I think it could happen really within the next week or so and then immediately come back up in like a massive push. I don't see that as a bad thing. But we'll see. Now, after that point in time, what I'm imagining is maybe not what you want to have happen, but I'm imagining we're either going to break back through here and then ultimately break down. And if that, for example, if that hasn't been cleared yet, if we've just advanced and we haven't come back, then, you know, it's possible that we don't go that far. Right now, I think if you do the fib extension right here, it only gets you to like 560 or something. It's like 550, 560. If you did it low instead of the big move and then low, this build out only gets you to like 560s, doesn't get you up high. So it's better to have the bigger move with the bigger pullback for momentum. This ain't NVIDIA, JP. I don't need to tell you that, but I'm really genuinely surprised that you compared this to NVIDIA. That's a very strange comparison to make. Dude, there's so many charts that left so many gaps. We could go through them all. I talk about gaps like that all the time. Not every gap is being filled, but this ain't Nvidia. This ain't an ETF. This is AMC we're talking about. I genuinely don't know how, I got to be honest with you, I don't know how anyone can look at this chart anymore and ever say that gaps may not be filled. This is the only one I've been like kind of inclined lately to think that might not be filled because it's a breakaway. That's the one at 3, but I still think that there's a strong chance we're going to go back down. So, yeah, I can't see any reasonable argument that AMC won't fill its gaps. You've got the entire chart has never not filled a gap, like except for maybe some upside ones at this point. That's it. Like all of these gaps that were made, there were 20 some odd gaps made between January 21st and May 2021. During that markup period, gaps didn't get filled. Are we doing that same thing right now? I don't think we are. But because we're just not there yet. Like this is not even close to the same position in terms of like breakout levels. It's just not. So I would have a very difficult time arguing that we're about to do this. I'm not saying it's not possible. I just can't argue it. It's not my argument. So that does happen during big markup phases. But there's another gap that happened down here that was filled, and that was this gap from the March drop, which I've already talked about is exactly the same, on the same exact parallel that the gap we just made from May. And this is a big gap up that ran up high, looked like it was going to advance, and then it comes all the way back down to fill it, right? It's just silly to mince words about gaps right now. And I'm not trying to be a jerk, but I would never compare this to Nvidia. It's just not the same. That's a valuation thing, right? And I know some of you guys you're arguing right now about it. You're saying that you're thinking it's valued higher. It's fundamentally valued. It should be valued higher. I don't know if that's true. Right now, if you sold this company off, you're going to have more debt more liability than you are profit. It could be liquidated, right? And presumably you would make a loss. That doesn't sound like a winning $10 company to me. That sounds like something that people are trying to drive it low. Now, have they corrected the ship enough that that's not going to be the case? Maybe. I think there's a lot of people who are buying into this, big companies, big funds who look at this as a distressed stock that's going to make a turnaround. But I don't think fundamentally you could make a good argument for $10 to $12 just because Cinemark's up there. Yeah, I'm sorry. If AMC needs to keep retesting lower levels, this is a piece of crap stock. What makes you think this stock is amazing? It's a legitimate question because if you're just looking at the history of the stock, you would have to look at this and say that all it's done is lost considerable value over the last 3 years, like 99% of its value. If you think that, then it's not a good stock. If you're just thinking through that and you're thinking that's the way the pattern is, it has been in a distributive model. In order for you to get out of that, you have to generate a bottom. You're not really wrong that it's a piece of crap if it just has to keep going lower, but the idea of AMC forming like a gigantic double bottom is not bad. So I don't know the logic behind what you're saying. You're saying you're speaking logically. Well, logic would tell you that a giant double bottom is good. So we don't have to keep retesting lower and lower levels as long as the chart doesn't demand it. It's not set up that way. We haven't made the breakout yet. So if you're looking for confirmation, it's not there. It's just not. I don't have anything else to say about it. Like, this to me is not done. It's not impossible that this is like a backup to maybe this level, this $4 level, and then it's not going to go lower again, and this is some kind of V-shaped bottom we haven't seen before. But it's set up very much the same way as that was set up in 2020. And in 2020, that jump initially was met by distribution back to the downside to come back and retrade the lower levels that were left behind. There's a lot of levels down here at like 350. There's levels down here at sub, 240, whatever it is. All of that stuff hasn't been traded like at all. And the idea of this as a gigantic range is very possible. There's no other chart that you would look at this with such disdain except AMC. Like almost every other situation that we see like this, people are like, yeah, okay, that makes sense. Well, yeah, because it does. Like, the idea of a chart coming down, hitting a low, bouncing, and then selling off again, and then going back to that low is, guys, like that is all of Wyckoff, like all of it. Go to the tops. Look at the double tops that have existed. Flip the chart upside down if it makes you feel better. It's not that every time it has to be double. It doesn't. But if it's a V-shaped recovery, I guess it doesn't have to be. But a lot of times those V-shaped recoveries are not. They're like temporary. I just think it's an odd thing for someone to look at this. If this were like on a small scale, I don't think anyone would be questioning that this comes back down. If this were small scale, you'd be like, yeah, probably going to come back. Fill that gap. So what makes this different is that it's huge and that you want it to run up. Because sellers are not there to, they're there to stop, they're trying to stop the advance of a stock, but also because they know that typically buyers want to buy in again. So there's usually a lot of bid and ask behavior on the bottom of a range and on the top of a range. When you're forming a range and you come off of a bottom, that should never ever be assumed. It's the exact same question. I don't know what you're kind of getting at. You're kind of losing me here. There's always what's called like an auto reaction, and then there's often another push up to define a top, a sell zone. That's called a phase B top. And usually you have what we call like a phase B bottom, which generates sometimes lower than the original bottom, which is where it comes back to. And then you end up forming like a spring sometimes it doesn't, and then you leave. This is the basic Wyckoff setup, right? And there's LPSs along the way. Right, I didn't draw them all, but then you go to the SOS, which is the top of the range. This is how a stock changes direction going down and going up. It doesn't have to have the second low, but even if it doesn't, you still get sellers. Sellers are going to pick up on this. They still want to advance the stock the other direction. They're going to think this is like a dead cat bounce until it isn't, right? Till they can't push it down anymore, which is often why we see this as like an iterative function when it gets to the spring. This is why I like springs and why I'm really pretty darn good at calling out these kind of iterative moves, because they're trying to do the same thing over and over again, right? They're bringing it up to try to get sellers. There's buy-in, of course, during that time period. You're shaking out sellers till all of a sudden that pattern's reversed, and then the next shakeout jumps over the resistance, right? Then it checks back tests the level. So if I'm looking at something like this and it's perfectly logical, then why in the heck would this look any different? Like this looks exactly the same. It just needs to come back and check that level. And then when you look at the big picture, it's like even more so. It's like, sure, locally, like this looks like it can go do that and then come back to the top, and then we'll see what happens. And then on the big picture, it's like, well, kind of just looks like it's getting ready to do its thing, and you know, finish out a phase B top that goes higher than 6. I don't know. Like, I don't know what else to tell you. Bigger picture wise, there was nothing about this that makes me think that it couldn't. I honestly thought this for a while too. I'm going to go back to WTO in a second, but I thought it could come all the way up to 1380 and then all the way back down. Because this is a huge range. It's humongous. It goes from like $12 down to $2. If you have more if you have more questions about that, I would suggest that you look at, that's not dead, by the way, this kind of move. Roger Miyagi's being kind of a downer today, but that's not dead. It's purely like liquidity. Liquidity moves the market. You're going to go to where the bid and the ask are. If people think if institutions really thought it was valued at $12, we'd be at $12 right now, because that's where the big money is. So you can jump on the bandwagon if you want to jump on the bandwagon and talk about what this is and what this isn't. Maybe it doesn't even go that high. Maybe it breaks down and goes down low now. That's what Stockfather had been arguing, right? And then we could be set up for some kind of a bigger, earlier run, like going into maybe March of next year or something. I don't know. It's layers. But we're just looking at a tiny little retracement here of like 30 cents, and you're giving me like a hard time about it. And I'm like, I don't really get that. I think this thing hasn't even come back to really form a bottom yet. I think it's just reacted, and then I think it could definitely have a secondary distribution. That's what my argument's been this whole time. I've never said anything else. I've never said that I thought it was just going to take off from here and run. If that happens, then I would be wrong about my interpretation of this. I've always contested since this first run up that we might get a second one, and then we'd probably come back down. Yeah, WTO is kind of in a good spot. There's nothing wrong with it. It's looking like it's made the right advancements here. You can see it's really low. So unfortunately, if there's going to be anything said negative about it, I suppose, I would suggest that right now, yeah, so we might have to clean this up a bit because it looked kind of messy. I can't tell what's going on right there. We're worked our way out of that green trend, so that's kind of done now. This was the big breakout here. That mattered because it was the steeper of the trends, and I think we had used that as a way of understanding the middle. So we used it as like a 50% projection, which really is more to do with waveforms than anything else. But if it can get above that 50% projection, usually that's a positive sign for a push-off. That's happened. So at this point, I think it's fair that we can kind of get rid of some of those. This orange line coming down was the it's the M-cross line. So we talked about this just a little while ago, not to go right back to AMC again, but we were talking about this a few minutes ago on AMC. So when you have a breakdown or a breakout, it doesn't matter which it is. Anytime you see that kind of move, you should pay attention to the direction that the bears and the bulls were trying to go before the direction changed. So if there's a move to the upside, then later they may end up coming back, which is the case on AMC, to try to get back to that upside move. If there's a potential move to the downside, like this case here, they may eventually kind of use that. So these are early trend indicators is what we're talking about that could tell you maybe potentially which direction it might go if it needs to retrace or if it breaks out. So when we look at WTO, I found one of them that I really thought was very important back here. And I think, yeah, it was this breakout low of this creek. So the reason that I identified that as important is because, again, it changed direction here, went back to the upside. But then also you can see that change of direction was met with a really steep trend. And it may seem, again, kind of like irrelevant because you're like, well, it's only got 2 points there. But it indicated to me that when this was going to the upside, that bears were already kind of planning. It sounds weird, but the bears were already developing a trend to come down. And so as this pushed away in this widening, right, and it broke down ultimately on this widening, there was a sign of weakness here. So it pushed below that trend in a weakness, which eventually, you know, it might get back to at some point in the future. It's hard to say. Could even be after this next upward move. It may not go anywhere, and then it may drop again. And that sign of weakness could be another indication of like potential direction to the downside. This could end up being at 0 or something ridiculous, you know. I'm not going to go that far just yet. I wasn't personally playing this for a long-term like kind of trade. I'm looking at it like short-term. There's some potential here. So I saw this as a probable sign of weakness back here, that it broke through this trend, which I've got bolded in gray. Then it drove to the top of that trend. It broke out. There's another downtrend that's defined going this direction before it goes up. And then, of course, it drops. So this M has this downward trajectory on this orange line. And ultimately, like, you can see that we're kind of anchored beneath it. It would be by itself perhaps enough evidence of possibility. But then in addition to that, we get some kind of early checks along that marker as well. And let me see if I can get rid of that. There you go. And that is when it comes down, it actually rejects right underneath it on that reverse split date. So on the reverse split date, it's not at $1, it's at like 111, which is weird unless you know that that line is there. And then you can see it as like an anchor, and it makes a lot more sense. I know I've got a lot of lines on my chart, so I'm doing my best. I'm going to start cleaning them up as we go, so that it's a little bit more obvious what's most important here. I don't want it to be like super confusing, even if my charts are a little messy. You should be able to tell what's most important, not have to like squint your eyes. So yeah, so this was the setup, right? And what we did is we looked at on WTO what would be a possible rebound trade. So the stiletto, as you see it drop in, is super steep here, right? So there's a potential like, oh, there's a potential for some kind of massive rebound. Except that happened right before, and this is the big but, right? That happened right before that reverse split, or that split value happens, and it happens right before this breakdown. So the problem I have with that is if it's going to do that, it would probably not do that, and I don't want to be like this negative Nancy kind of type, but it probably wouldn't do that until it hit like a significant low. And I don't know how that's even possible. So I don't find that to be a very compelling drop to use. It also doesn't make any sense because I think if you look at the big picture, this is a huge amount of volume. And it's clearly coming off of this top way up high. So somebody sold off like a humongous position, I think, from this breakout all the way up, all the way back down. And I don't think it's a good one to use. So when I look at the stiletto, what we started to do is we started to look at the patterning of it. It set up a series of parallels, which we kind of marked off here this way. And they're not necessarily, again, the easiest to read here because I've got them all like almost like a pinkish color, which almost looks just like the white. Sorry. But it's coming down here in this pretty straightforward trend. And so I was looking at those levels as like, that's probably where we need to break out. And then there's all these other creeks. So we jumped the green creek. We've got the orange one right on top of us right now. So when I look at this, that's sort of like the big picture for me. It's a little confusing, but you'd have a possible wave. I'll start getting rid of some of these. I'll try to make it as simple as I can. I don't think that lower one matters as much. I'm going to get rid of my doodles again, just so I can make it really simple. So there were some measurements that I did, and I think the big picture here was that you'd have a possible wave up from this intersection. Originally we thought if it held here and it went back up, which didn't happen, then it could be like right there. So I had that pegged as like the intersection. I thought that's a good place. There's a lot of convergence right there, but it just kind of avoided it. So that didn't happen. We're at another place right now where it's not convergence anymore. It's not really hitting that mark. It's just kind of meeting everything all at once, or not all at once, at slightly different times. So now looking at where we are, you can see that's the floor. This is just a wave down. If it gets back above that floor, it's also getting back above probably a number of things. And I could see it going up to like 42 cents and then probably coming back to retest the floor as it would need to before potentially advancing a lot further. The main issues that I've been taking with this is that this setup, because it doesn't have the obvious form for the stiletto, the setup probably is just going to use this post-split drop for its move. So there's a possibility it goes way higher, but for now, I think if it can make the advancement, and it's the same move on the other side, by the way, so it is mirroring. Like you can see this move goes up, down, up again. It's not like, again, you're looking at that like a retest, like, oh no, why do we have to retest? They do that on the sell side too. They tested that as a sell level, so I think you'll jump over it. It may end up being like lower. We're kind of already there, aren't we? Yeah. So this could end up being kind of low. I don't know. Anyways, point being that essentially depends on where it goes from, but I think you're likely going to come back up to this value at 51 cents, which not surprisingly was the level I kept saying earlier, like I need to get over that level. So I'm not sure we're going to go any further than that right now. I hate to say it. It's a good trade from where we are, but if you got in too early, and my average is right around there or something, it's not really great. It may not be the best trade. So what about the rest of this? Couldn't it do the rest of this? Maybe. You know, I've got this as kind of like the main secondary action, I suppose, if you want to call it that. It seems possible to me. I'm not going to say it's going to keep mirroring out, but it seems possible to me that this could go up to, I think we use this because this is like the 4-hour moving average back here. I think if it meets the 4-hour, it would be like up here. It does seem possible, or maybe probable is a better word, that this needs to go back up and check this gray box area. So if I were going to be a gambling man, and I guess in this case I kind of am, I would suggest it goes up and hits its head around $1.30 down to like $1.10 again. I think it's going to come back to that split value level before it does anything else. It just seems very likely. It hasn't been checked. So I think there's a decent possibility that it gets a pretty huge move back up. I don't necessarily think it's going to go even to 130. That does seem possible, but I think it could probably even stop at like 120s here. Not quite get there. But yeah, it's very possible this happens really soon. So I think there's a good chance that this could go all the way up to 50 cents, and then if it can continue a run, you might see up to about $1. I've been watching it. Yeah, this looks like iterations that are starting to stop, which is good. So this clearly is not the right time frame for these, or it's maybe I did this with extended trading hours on. It doesn't look any better. Ooh, that's a weird looking compression right there at $2. It's like right at 2. I don't know when I made this chart, but these lines don't match. That looks right. I think it was the 4 hour. Sorry. I was just looking at something and I'm like, yeah, that didn't really work out. Okay, so that extended hours compression at like $2 is very important. I didn't have that on the chart, so I'm going to mark off 199. And then, I don't know what I was doing here. This had to have been extended hours. It's not even visible here. So on the extended hours chart, this must have looked like it was going to drop to 51 cents. Actually, I have no idea where that comes from. Yep, that's weird. I wouldn't have done that for no reason, so I'm not sure. I'm not sure where that came from, y'all. It's been a minute since I've looked at this chart. I would never just put a random line in the middle of nowhere like that. There must be a purpose, but whatever. We can keep the target in mind, even if we don't understand it completely. It must have had something to do with the curve that I perceived, but all right. This to me is a pretty big deal. This is a cluster cuss of stuff. Let's get rid of that. A lot of times I do these when I'm like looking at something close up, and then I come back later and I'm like, wait, what was I doing? Why did I do that? I was probably mapping two different possibilities for paths there. Okay. Yeah, I mean, honestly, this could be a really good trade if it breaks above like 24 cents here, and just because it could just go right back up to the top at 54 cents. Because I think what we looked at was a possibility that this is a, like again, like a double bottom. Like here's an example of a chart that came really high and sat up high for a while and then came all the way back to the bottom because of a gigantic gap. And probably because there was a desire to trade below the floor at 16 cents here, eventually it came back. So this looks like a series of potential, like we call those maybe the LSPYs, right? And it definitely looks to me like a possible iterative model. So we're going to use that. Keep that in mind. Yeah, so what you're looking at is a walk up each time. And if the walk up changes direction by jumping the creek, then often that is met with like a huge move. And that's where you want to see the, again, like change of characters, as we call it, where it starts doing something different than what it was doing before. Oh, so this tried to jump early, and it looks like it did a little bit. It's an ugly looking chart, I gotta be honest, because this jump is almost completely disguised. That's why it looks wrong, because of the dotted line thing. Yeah, you can see that jump right there. It's bizarre. It's a bizarre move. 1, 2, 3, 4 breaks down. It does another 1, 2, 3, 4. Hyper compressed. Price action. Yeah, that's an iterative move. 1, 2, 3, 4. That's the same exact move. It's if you don't like the 1, 2, 3, 4 motif, which maybe you don't agree with, think about it like the double M. That's usually what we're talking about anyways. It's like this idea that it has this push up, tries again, then it goes low, and then it pushes up, tries again. And it's the same thing here. So you often get like 4 distinct marks, though they're not always like perfect. And so I see the same thing right here. There's a 1, 2, and then a low, lull, and then a 1, and then a 2, and then a breakdown. And it's trying it again, it looks like. Now I'm curious to see how small this has gotten, because it could be hugely explosive starting like now. Yeah, this is the 1 hour, and this thing looked like it's barcoding with like no volume. That's a big deal. So now I see it right here. 1, 2. I don't see a 2. I just see 1 and then 2 breakdown. And it did it low. So yeah, I think it's changing character. So then what you're going to look at is what happened on each of the breakdowns. Here, here. Yeah, it started like widening almost, because this looks like the breakdown right there, but then it just kind of went wide. There's like no consistency. So somebody was trying to drive it down to 10, which follows because that's where the previous lows are at 10. And it looks like that's the day before it split, so a day or so before it split, maybe a month or so. I'm on the hour, I can't tell. It looks like a day before. So there's a gap way low at like 10 cents. So this is where those iterations are pushing. They're pushing low, like they're going to go down to this pocket. Always important to note where those targets are. There's a sensibility to it. That's good. Yeah, it's typically a good thing to see that. But we don't really care at this point what that means. We're really looking at what happens when it starts breaking up, if it does change direction. So that would be an evidence right there. We use like Christmassy colors. Right, so this is the first trajectory. So again, bold trajectory that's lost is right there. And that one is paired with the second bold trajectory, which is right here, which doesn't look like, I mean, it could have been retested maybe once. It looks like it tried, and then it's going back up to it again. So then I look at that, and I look at the drop-off levels. So the first drop-off level, so those are the trajectories, and then the drop-off levels, this one's kind of tricky. One of them is right here, for sure, because it dropped through that. That's about the 50% too. So they did a flush. So that 50% is probably more accurate than... no, because there's a second line there. Never mind. So yeah, that's definitely one right there. That's a target. And then it looks like it's kind of ugly, but it's like something similar happened right here. You can see like that it built out really high right there from that peak down to this bottom. And then that's already been met. So I think that makes sense. So this is a good thing, because if you can see the breakdown has already been met once, then it should be adequate, or at least logical, that it might meet the second one on the breakout. Because this would be like the change of character is, oh, we're going back up to check this level. Oh, we're going back up to check this level. Or we're going back up to check this level. Right? You get these melt ups because it's going in that sequence. So the next one is, if it doesn't break, like it doesn't change again, in which case I think it's going to go to 10 cents. The next one would be the next level up. This is tricky. you hear me tisking, it's because this has a weakness. So you see how this pushed up on the auto reaction and then it goes down and it immediately makes a lower low? That's a weakness. So it was actually pushing down. It wasn't pushing up. So there's a buried, it's going to be a little bit buried in here if there is a bull trend. It's going to ignore parts of this. It's right there. So you see when it was lost, so in this case, it's a little different because this stayed above it the whole time. There's no like really obvious weakness. This one has a really clear weakness, tries to recapture it, and then it loses it here. It's like actually the breakdown right there. So that becomes a really significant point of interest because you have that as your level of we lost the trend, and then this would be probably the bull trend. And there would have been a bear trend down here that's pointing towards the lows. Probably is this cross. It's probably pretty straightforward. It's this guy right here. The supply levels are pointing down. It could be that easy. Let me check to see if sometimes it's like buried as well, but I think this one's really straightforward. You can see that interaction right there on it's like a triangulation of the points. So there's a very strong chance that this is going to go up to 23 cents. I cannot guarantee anything in the market, but that is a huge amount of setup for that particular spot. Yeah, it's like 23.5. It doesn't look timely. It looks like it might only get there around December 23rd. It doesn't look like it would go straight up, but you never know. These things, momentum is not always like the most obvious. That's just the target. It seems odd to me to even suggest this, but it is possible that this could end up forming like a larger M, in which case this could still technically, like, I know it seems like it wouldn't happen, but this could possibly still come down and then go. It's a little wonky looking, like, to think that could happen, but it just depends, because it's probably going to do another one of these where it pushes up and then it tries to do an LPS, just like it's been doing here, like where it's dropping an LPS, dropping, LSPY, drop, LSPY, drop, LSPY. It'll try to do the same thing again, and if it succeeds and they can knock it down, it would be really low, like here or something. If they can succeed in knocking it low, it'll go low. If it does not succeed, it's probably going to look like those J shapes that you get where it's like above the creek, and then it just continues. So it's no longer an LSPY, now it's an LPS. Just supply doesn't have the ability to advance it farther. I think that resonates quite a bit with maybe what I would expect here, because then you could have it do like a simple 2 LSPYs and then, or excuse me, 2 LPSs, and then come up and try to SOS maybe in this area. But I just want to warn you, like, technically this is an LPS right now because this larger range did come lower to 12. So if it holds, it's different, right? And if it drops, this could be like a spring. It would not surprise me if this still has another drop in it. Odd as that might sound, I know it seems a little odd, but because you're like, well, it looks like it's already going. I know. These things are strange. Sometimes what you think is obvious isn't really obvious. You know, this could still have a nasty kind of sell down left in it. But the good news is that I don't think after that point, if it hits 10, I don't think it's going to necessarily go lower. And that's why I'm wondering, like, you could get a really massive rally. It's in essentially the same time frame. So this is a curious one. either way, that's like an LPS version of this. That's a spring version of this. Yeah, I wouldn't even be surprised if this had some kind of nasty, like, after hours gap down or something, you know, just something really out there and like wild. So the next time it makes a high, this is where you're going to have the buy-in. So the next time it makes a high, which is probably going to be in this pocket right on the top here, around 17 cents, we've already sort of established that this is likely anyways for a number of reasons. Plus it's the top, so it's easy enough. Right around there is where you would want to have like a marker, because what you'd want to do is see that if it hits that, it should react. You should have sellers waiting for you right there. That's a 50% retracement. And then it's also like this arc. You're going to get a knockdown. I don't think that's very controversial. I think it'd be pretty straightforward. That will create a new creek, and that's going to be the one that you're going to want to watch. If it breaks back to the upside, and I'm assuming it's here, but it could be like slightly lower. Technically, it could be like right now already forming it, you know, of resistance. But I'm just going to go with what I'm saying and thinking that it's going to come all the way to that 50% retracement. So I think it'll go to like 17.5, and then it's going to come back. It has to come back anyways to check. You guys are like, no more checking. Well, that's the name of the game here, right? Like, it would need to come back down anyways to 16 cents, more than likely, if it's a healthy move, all right? And then if it advances again, we're talking about maybe the following Monday on the 10th or something, breaking back this way. And then you're going to go like you did here. This went up to this first creek. I would call it an ice level maybe, the green line. You'd also likewise see something kind of similar. This is where I'm a little bit disjointed because I'm having it go early and then back up. In theory, I suppose if it's 1-to-1, well, it's something like that. Anyways, maybe this is a little too far over. I don't know. And maybe it's not that fast is what I'm trying to say. Like, this could take a little bit longer to kind of make up its mind. Anyways, it'd be something along these lines. You come up here and you should have another backup right here, which would check the new like creek top right there, the new one that was made. Okay, and then if it doesn't do that, if it rejects and it comes down and it starts making a new low, and specifically if it breaks beneath this creek, period, I think through 16 cents, then it's likely you're going to drop down. This is like a 1, 2, 3, 4. I don't see a weakness here, but that doesn't mean it's not there. It could just be I'm not seeing it. This, to me, is like the pushback down, and it didn't go lower than the previous bottom. But there are some low trends here. Like this is one that's pretty low. And that could indicate, again, bears trying to like drive that direction and push down, like through selling, try to push it through. So these are things that you can watch later on. But right now it's kind of in this moment of like truth. It needs to push up, maybe a little more, push resistance. So it should come back over 17.5, and then I think it comes back to 16 and it's healthy if it breaks out after that. And then you can have a pretty good run up at that point. I think it's fairly straightforward. Like, even if there's backups, it should come all the way up to 23. That's a 40% move. So even if there's like bigger backups here. So shares only position would be very beneficial in this case, I think. You know what? This actually probably hits here again, because there's a resistance right there at 20 cents. So that's probably what would look like. That's where it would back up. Then it doesn't hit that top till the right time. Weirdly though, like the spring mode might look worse, but it could actually be stronger in some ways. It's a matter of opinion, but a lot of times springs give you a stronger move. So like you're gonna get more percentage move here than you would in these. And then ultimately, I hate to be like that guy because, again, it's like, don't you think it's over after that? Well, maybe. You know, the thing is, like, that's all pretty temporary. And when you look at the bigger picture, there's a decent sized trend right here that goes, it's fairly straightforward, you know, and this doesn't do much to get to it. So I guess if it's strong, then this could be like a 50-50 kind of thing. This is, again, maybe a case for a creek or a case for a spring down to 10. Is you get it 10 and then 50-50 up through the SOS. That looks pretty clean to me. And then you'd have a really good chance of this going all the way to 55 cents. That's a big move. So that's a 400% move. It looks small because of these numbers, but that's a 400% move. That's a huge move. So if it did that, I'd be like, whoa, you know. I think if this thing drops to 10 cents, I'm definitely like looking at it really carefully, because that would be an adequate check. Now, that's kind of wishful thinking that it would just do that, but there is a gap, so it's not exactly like completely off my rocker level wise. It would make sense, and it's the trend, so it's possible. Definitely a possibility. The problem with this is that the assumption might be at that point that it actually crosses over and just keeps going, but this may not be met for a really long time. And in fact, it's kind of looking like it's sort of similar to what we had done before. Like, this could be a really long-winded bottom if it's a bottom. So yeah, it's already kind of done the, yeah. So the problem is that iterations, so you guys are seeing there's an iteration here with the walk down. That's just doing the same thing over and over, but it's also part of a larger move. And one of the things that's tricky about iterations is that you think that it's over. You think, oh, that's it. That's the bottom, and then it just rockets. It's possible, but it's also possible that this iterates again. And it's kind of like the 2020 model is kind of like this. It sort of had, like in AMC, it sort of has like this secondary bounce that you think it's going to go. And that was like the end of the year bounce. But it was really like a secondary move. So this would be like the spring here. Like maybe this is like a spring motion there where it's finishing. It looks like it's going to go, but then it breaks down. I don't know. It's possible, right? It's similar to what we drew. And that's the spring to 10. But then it actually does it again. So it goes up high. I mean, it looks really close to what I would expect too. Oof, it's ugly. Yeah, so sorry guys. So from an iteration standpoint, like, this definitely works. It could box in like a really similar move, and the goal would be to take it back to like the middle, which is what this looks like. So this looks like, yeah, so the middle, it's weird, man, because it doesn't quite work quite there. Yeah, it's like quite, yeah, it's basically if you take this and reduce this whole motif by about 50%, you get the same result. So it makes sense because it's 50%, but it gives you like a really simple setup. Look at where that is, right? So without using a whole lot of complexity, because I know we got a lot of complexity potential here, I would have expected this maybe to not go that high, but if it does, I guess it's possible. You can get a little extension. And then I would have looked for like a cat ear, which is what you're getting. And then I would have watched for a walk down. Yeah, it's pretty close. And then you kind of start all over again, but you start lower. You see how this comes down to like that same buckle point? So if you look opposite, this almost looks like an arrow. It starts where this one breaks down. So it's building out along the same path. So if you were doing something similar, you would start this kind of motion where this broke down into a spring. So if you go back here and you look at, let's say for example, this goes up and then it comes down into a spring, that would be the motion of the final arc here. So I would expect it to come down to that point, and it actually travels past it and then goes back up to it. I would expect it to travel past that point, so it's just showing you that there's weakness, and then it would travel back up to it. And this is all theory, I know, because it's like way in the future, but if it works, I usually give it a little more credibility. And then, yeah, you would chop through. So this stays higher than the bottom, so that's consistent. So I actually think this would probably go pretty low. I think it would go through this bottom. Yeah, I mean it follows a very logical breakdown pattern here. It may not look perfectly one-to-one, but I think it's very likely that this iterates the whole thing again. And instead of it breaking out, it just goes back to retest the middle liquidity here. Yeah, that makes sense too. And then for other reasons. And then it's ready to go. So this is the creek now. So you've established that as your creek, and who knows, maybe that doesn't go that high. It doesn't really matter. We don't know. We don't need to know that right now. We can wait and find out later. But this would make sense to me. So then it does the same thing again. So this ends up being the big one because this is like the big one in the middle. This is really just a distribution back to this top. So that's why I dropped it down, because it was looking really high, but I'm like, it doesn't need to do that, because it really would just be coming back to this bottom right here. So then this actually doesn't need to come this high either. This is really just a breakdown and ultimately just testing this bottom. So wherever this ends up being. And all of this may not make a lot of sense until you start looking at the bigger picture and you think about this gap zone right here and where that is, and you look at across from it, you can definitely see that that correlates to a selling range from back yonder. So I don't look for those things as a way of like necessarily confirming it, but just to say that there's a greater probability that ring, if it rings true, I feel like that's a higher probability that that's that's where it happen, right? This breakdown makes perfect sense here because this motion up generated a creek. You'd have to break back through it. It triangulates right in the right pocket. So this is a long trade. This is March, and then honestly, I think it would just compress. The idea of like speeding up and slowing down isn't really like necessarily the best way to look at it. But it's possible then that this draws low, and I don't know where it goes from there. We'd have to wait because this will form a series of trajectories down. My original thought was pretty low. I mean, I had it going like 6 cents. So that looks really ugly. But in the big picture, because it was like, oh no, it's going to drop like super low. Well, maybe. In the big picture analysis, it doesn't really matter how low it goes, because if it drops below this bottom, it's already made a phase B, potentially a phase B bottom here, like a secondary bottom. So it really just has to drop below like 10 cents. If that ends up being a spring to 10 cents in the next whatever few days, it doesn't just go straight up and it ends up doing the spring, then that'll be the bottom. And if it's not, then it's already in and it's at 12 cents. So it just has to come back down beneath the floor if it's going to spring. So either of those, and then everything else is kind of inconsequential. And then the reaction, if this ends up being a stock that is going to recover, the reaction would be very similar to what we see here. You'd have another one. So this comes up back to this. So this would have a big reaction to the upside. I would venture that at this point, if it's going to continue to drop, that it doesn't necessarily make a higher high here, and then it just kind of starts all over again with another breakdown. But given the nature of what this is, the way this looks, I think this could come all the way back up. See how this one comes all the way back up to this breakdown? This could come all the way back up to this breakdown. I think this could end up being where it jumps the creek, because then you'd have, yeah, I mean, it could do the same thing, but then you'd have a significant possibility, I think, a very strong possibility that this doesn't actually do that again. Or if it does, it rejects and it doesn't go as low, that kind of stuff, right? Because, yeah, they can do it indefinitely. This might be where you actually get a jump, and then maybe the next one just comes down to retest the floor, and then it finally like leaps. And this is where I would expect there to be like some pretty massive LPSs back to the upside. So it should work out that when it gets to this point, that whatever creeks are established would be where those M crosses and junk happen later. So if like you do it right, this sounds weird, but it almost like works its way out. I don't know if you could follow all that logic or whatever it was you want to call it, nonsense. But if you follow the iteration, it should logically make sense when it finally gets to the end. Yeah, that makes sense to me. And then it's back to the higher iterations, and then you look at what happens after. Well, if this is the way it breaks out, and I'm not sure it's going to be that slow, it could be really fast, like way over here somewhere, instead of being like more gradual. Regardless, then you would look at like what happens next, and that would just be walking it back out again to the next level, because if that breakout signifies that middle to low iteration where it comes back to the top, this also would do the same thing. And you'd have a little bit of confusion there maybe because it's complicated, but yeah, I think at that point this is kind of confusing. This weird daily to 4-hour thing, each one's like completely different. I really wish they didn't do that kind of stuff. But whatever. Yeah, I think at that point we're talking about an SOS, because this triangulates to like way over here, and yeah, I mean, it's basically like your SOS level. So that would be like the final move. I may have overestimated how quickly it goes. It all works though. I mean, that's clean. This creates like a new level here. And then your SOS is where things could potentially change for the better. Though I would argue that whoever bought it at $2 back there during all that chop, is something about those split values. It seems really significant. You see it's like at 2 and at 2. It's between like $2 and $3 almost perfectly. And there's that weird chop that happened in that extended hours right at 2. So it is possible that this doesn't advance beyond 2. Like there may just be a desire to get it back into this pocket for some reason. That's way in the future. It's neither here nor there. I'm just looking at it. It just seems really obvious. Like somebody built some kind of a wall there for some reason. I don't know. So that could be the wave out. And then I'd have to go back and look at this, but I think on the bigger picture, it would probably be a giant M. So again, like if it makes sense, yeah, that's the M cross spot right there. So if it makes sense, then I usually think it's a little bit more probable. And actually, that's jumping whatever the heck that is. I think it's because of the two different values, so I don't know. Well, this is maybe where you have like an SOS potential, and then you could have like a backup that comes down pretty low. It's essentially like a 50% retracement. Frankly, I don't know what to think at that point. This would be like way later. There'd be some kind of a trend breakdown. This would probably be like an acceleration. So it'd end up looking like a parabola to the upside, you know. And then you'd have like a chop here and then a breakdown. Maybe it's going to regain itself. And that's way later. Long term, it's either a UTAD kind of deal, or it's going to come up and sell and then drive the price lower, or it's really recovering and maybe it stays above $1 at this point, you know. And so even though this maybe breaks the trend, maybe it breaks this uptrend here, it ends up staying above $1, and that's how the recovery starts. Yeah, and then you'd get another break here. You guys are like, what are you doing, man? None of this has even happened, Booksy. I know. I'm just showing you, like, this is what it would have to look like. And then you do, like, an SOS, like there. And this falls in line with maybe what we see over here with this breakdown and where that gap is. So, yeah, it works. That's really where it could maybe go recover. How long is that? Let's take a look. Probably can't tell on this chart. $259 bars on a 4-hour chart, or 2,500, I'm sorry. And that would be like 1,250 just on average days, which is like 2 years, 365 times 2. So yeah, 2-year cycle sounds about right for a wave. I can't mess with this chart though because it doesn't allow me to look at that. It's crazy. I like that, man. That's good. That works. Whatever. That's probably too precise, but it's fun to do it sometimes and see what you can see. You asked me questions. Wait, did it just check 17 come back to 16? Was that enough? Are we looking at full 16 even back up? I'm saying that this could just be an up before the down. Like, this could technically just be a UTAD kind of thing. I don't see any major weakness here, so that's why I was like, meh, maybe not. And really, this may not even come all the way down to 10. I mean, this could be like the top here and then end up that being that. You know, I don't know for sure. Those are speculation on my part. You'd have to just kind of guess where you think it's going to end up. Because if you don't really care that this goes lower right now, this could just be like a phase B bottom at 11, and then later it could come back and break through it and go to 10. So that would be an argument for maybe not even ever going significantly lower. Maybe it goes to like 9 cents. I don't know. Way later. Okay. My thought was just that's probable because there's a big gap down there and we're already like really close. So they may take it up first, do a long-winded distribution, bring it down again. So what I was saying locally is that if it goes over the top, which is at 17.5, then I would watch. Looks like there's a 4-hour 180 right here. So like I was trying to make a very light case that's the 90. That's not the 180. I was making a case that it's possible that it may not actually come up that high. I thought it would. Check this 17. It's like 17. Let's make sure it's right. It's the high from over here. 17.85. So it's not exactly. That's why this thing's not actually straight. There we go. Yeah, it's 17.85 is technically where that number is, but I mean, really from here, it could just drop. It seems like it won't, right? Because right now it broke out and you're like, well, all it has to do is hold and it can go. Well, yes, that's true. But remember, as it creates a top, it's going to, it hasn't pushed resistance yet, so that's important. So it really hasn't made what we would call an SOS. This could still be a UTAD situation. That's what I'm trying to say, is like, it's not possible to know until it makes this top, and then once it backs up, it's then got to jump the creek, the bigger creek, which hasn't really been defined yet. We're not 100% sure because we don't know if it's made its top yet. So it's a little bit of a waiting game. That's why I put the alert above 17.5 or at 17.5. So if it hits it, I'll go look. And then below that, you really just want to see if it breaks through the lower creek. If it does that down here and loses it, I think it's likely going to drop and go ahead and go for what we would call like a spring. It's very speculative how low it goes from there. I'm speculating that it's going to do something similar and start iterating again in really, really tight fashion. Like you'd see like really high volume here and a drop, and that would be a potential spring. And I'm saying that I actually think they're going to play out a bigger iteration. It's going to come up, have a big 50-50 run back to the upside. That's a big move. It's going to get a lot of people's attention. So I don't think it's a bad thing. But I also know that these are speculative moves, so you got to keep in mind, like, I'm doing a lot of really high detailed stuff for the future, and it could be very different. It's more of an idea than anything else. Yeah, I mean, this is kind of the same. So because it had like a split, I'm guessing they're splitting to avoid going below to get delisted. This is a rough chart. So the reason I don't like this is because these splits are kind of like right around these two outer marks, and I don't know what Chemtrex does, so it's not my area of specialty, but that might be a big part of this, is like whether you think it's actually going to recover. Oh, if this is like the WTO chart and it looks like it, then it could play into a recovery back to the drop level, but I don't like where these splits are. So this is a tough one. If it was splitting in order to, yeah, it's a real low float. Yeah, if it was splitting to avoid going below like whatever delisting value in $1 or whatever, then it's very possible it just keeps getting sold off. I mean, I don't know what the future is for this company, so sometimes that's just what happens, and it just keeps going down and keeps resetting, keeps going down and keeps resetting. And there's a lot of selling going on after these splits, so people are clearly fearful. I would probably not trade this unless it just jumps a creek. And then I would really just be in it for like a short-term momentum swing. I don't think I would be, like, you could maybe use RSI or something. Because here's where I'm like thinking that my normal spiel won't work. Like if I were looking at this and I thought this was like that stiletto thing, that's one thing. But if it happens around these split values, I feel like it's not consistent, because you can't really judge the liquidity desires very easily once the stock is split. Whether or not those values are reasonable anymore is very difficult to say. You're changing I know that like technically a split doesn't change the value of the company, like if it's done in a certain way, but because it's being sold down so much, I personally like just struggle with it. I don't know if it's a universal problem for people, but when I see that, I'm like, I don't know. Like, is it gonna go back to 14? I don't know. I'll be honest, it looks very similar to what we saw here. There's like a repeated 1, 2 kind of up thrust. What you want to look for is see if there was a weakness between the two up thrusts. Usually that's happened here 1, 2, maybe 3 times. So what you'll do is you'll look at the previous bottom, and then you'll see if between the up thrusts here, you see how it broke low? It's like a penny. And then it takes it up. This is just a cat ear, basically. So that valley right there is indicative of where its weakness is. And then the same thing happens here. It has like an auto reaction, and then it just bleeds low, and then it takes it back up again. So there's a lot of weakness inherent in that kind of a move. So you'd have to look at this the same way and see if it's doing something different. And if it is, then maybe it's not a bad trade. So I'm thinking that it's doing something slightly different. It did not make a weakness here. So the low was $3, and then chops a bit. Let me go in a little closer. Let's do 30 minutes. I need more information. So this first bounce looks pretty healthy. So this bounce to me looks like that classic cat ear, but then it didn't fall. You see how it's like top heavy? Like there's a lot of volume, or there's a lot of movement up top. So it's a nice bounce. But the rest of these look kind of anemic. So it's like they're struggling to get momentum. So they keep selling down. It's like distributing across this established level. So yeah, sell, sell, sell. So there is a weakness here because it changed direction twice. So this actually makes a higher high. So I'm going to go out on a limb and say that what I think is going on is that there's probably going to be a desire to trade low later. So I know this is kind of a stretch. You may think it doesn't make sense. But I've seen this kind of thing before where it may actually end up going. Like it may have a big move in a minute. It's sort of strange to sort of sit here and say you think it's going to go down, but it might go up first. Because what I'm seeing is that after this initial push, it made an effort to come down, and when it broke down here on that little cat ear structure, it tries to make a lower low. It didn't do it. So that to me is a big deal because it's basically maintaining an uptrend, right? And then you can see like these two highs, they actually, because of that, if you were going back in time watching the rewind, you would think that it's trying to break out because this tried to jump the creek and it tried to basically SOS. So it goes all the way to the top in an attempt to like kind of push back up. There's just some weaknesses in there, right? It's struggling. So when it fails and drops back through, it really comes down to this point right here, which is like the center liquid. So this is where it was built out. And bulls don't hold it. They have lost at this point. They've come too far back down. So they went too far, flew too close to the sun, right? And their wings burned off, and now they're in a free fall. So that's basically what happened. Is it got like too overbought probably, and then sellers took over, and they drove it right back through the support. So the issue that I'm coming to is like I was looking at this, and at first I thought there's no weakness, but then I'm like, well, really there is. Because this there is at least somewhat of a weakness here because this technically changed direction. So like it was going up, 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 and then it broke down here. So at that point, the question is, did it hold the support? And it tried to. You can see there's an early move, an early effort right here to hold on to it, but it ends up hooking and driving low. So what I think that means to me anyway is, even though this makes a higher low on the big picture, it does indicate that there's some kind of a directional influence this way. And I know it's a little awkward because it doesn't look quite like normal. That's why I'm saying like it's a little bizarre, because on the short term, I can see how that change of direction would imply that there's some effort on the part of sellers to go this way. You can see it in the chart. I don't think it's that complicated. And even in this secondary supply, you can see that desire to kind of drive the price down. It looks like they're trying to get to like sub $3, maybe to like 290s or something. It's not like super low. It's just there, below 3. So there may be a desire to kind of drive the price below 3 since it was such an even number. That's just a good place to start. Yeah. And then I don't know beyond that if I would use anything else. Maybe 290. Yeah, I don't know. I don't know if I'd use anything else like more complex. But I would suggest to you that something interesting does sometimes happen on these build outs, because you do have a, like I was saying before, you do have a bit of an an LSPY kind of thing here. It's like an early support. So it's bizarre because it actually went lower first and then it built this early support as if it's going to like maybe do what it did previously and drop again, but it doesn't drop. So it becomes like more like a prelim supply or something, or prelim support almost. In the past, if the chart manages to do a couple things, but if it manages to hold on to this liquid in the middle, you could actually break out still. And this is why I got a little bit stopped. So this does come up and does the kitty cat ear like you would expect. That trajectory right there is going to be pretty important. This one, where it breaks down. And then the trajectory from this bottom, even though it's kind of already been met, if it falls in line with that, and it does, that could end up being very significant as well. Yeah, it's pretty close. So let me do this. Yeah, see, that was where the breakdown was. Well, yeah, maybe. It may be that the bull side is trying to advance to get back to the trend, which makes sense because that did happen over here. Like as this was breaking down, like they're going back, even though it's going down the whole time, it doesn't really make a huge effort to go back up. Ultimately, it doesn't have the bigger breakdown until it hits that trend again. It drops like a rock. So I think there might be a desire to get back over there. And then that's the M cross. That's where supply and demand kind of meet right here. So I'm trying to identify where that target might lead you, but I mean, it could be that simple as well. I always say that kind of stuff, but Yeah. Whether or not they being like bulls are successful or not, I think is a question of a lot of things. But there's a pretty decent attempt right here to follow through on a wave this way. Now, that's pretty short term. That's like December 5th. Again, I don't know if they're successful. And then there's also the issue of like, I might be a little bit overzealous. Like I could be a little bit off. I put it right there. It's not impossible that it's closer to this breakdown. It doesn't change much, just slightly lower. So yeah, 393, 385. And then in order for this to kind of be, again, successful, it could be that this was again, like this is kind of like an auto reaction times 2, and then this is like a phase B top. And so you're going to get like one of two things, right? You'll get that early break or you get the breakdown. If the breakdown happens, it's probably going to go low and test the bottom. I can't tell you exactly where that would happen. I'm just kind of using this as a guide because this is typically like the middle of the M cross is typically the best line that you're going to have. And that would be this one. So it's not very hard to see it, and it's pretty easy to, I think it's pretty straightforward because this should be like a wedge almost. Yeah, maybe like that. So it may not go that high on this rebound. I have it going up way up high, but it may not. It's just, it depends. It could get kind of ugly here. You know, I'm not sure. There's a dozen different ways it could interact here because if it makes a higher high, it just pushes it out more. But, you know, in theory, this is December 5th, this is December 5th. These look like opposing, targets. So in theory, like, there could be a very explosive finale here where basically this goes down and hits, and then I don't know if it goes all the way back up, but it could be like really, really massive. That's probably the trade. See if there's anything special about 386 down to 290. It looks like the middle is 334, which is the middle of... All right, I buy it. That's the middle of that range, so... Yeah, it's where it came back up to here as well in this reaction. You see that? So I think that is likely what is going on here. It's not that different from the one we just looked at. I mean, it's pretty similar, so... Yeah, we're talking about like a slingshot, basically. If it does that. If it doesn't do that, then it crosses up now, and that's a little easier to do. So you basically would look at... that's a weird mark. Why is it so far out there? It's like way out there. Maybe. Yeah, I mean, I honestly don't think there's much debate here either. I think it's kind of the same thing we always talk about. So the cat ear may go sideways here. It may not, meaning this could end up being higher. like this. It really doesn't matter. Cat ear is a cat ear. If it crosses up, there's a huge bar all of a sudden as we're speaking. If it crosses up and manages to break above, then we're talking about just an LPS with continuation. So it's in the similar spot right here. Yeah, it would need to breach 341. So if you wanted a decent, I mean, I don't think it's the best trade ever, but it's 13%. It's not a huge trade. But yeah, I mean, if it went above 341, then you could probably see it going to like 390 or 380s. That makes sense to me because it would need to come back above the top here, push the resistance up, and then it would probably come back and check this floor here. And both of those would constitute a creek cross as well. You see how that correlates to this downward motion of the trajectory down? It's that jump right there. Whereas the rejection rejects underneath 334 and then heads low. This goes above it and then heads high, and it would basically jump, yeah, in a very simple fashion. It looked like a wave across this creek down as well. And there's variations of this, so keep in mind, like, I'm doing it like a really particular way. There's other variations of this that may not look so dramatic. Like, one is that this could technically hit this gap at like there and then come back up. Now there's a lot of weird little possibilities in the middle of this. So I would just watch carefully this range and then maybe low. I don't really know if I would buy significantly off of like 310 or something if it just because it filled that gap. It's kind of a meh point for me. And then ultimately, like, at the end of the day, this reaction is just locally the only reaction I think you can expect, because unfortunately there's just a massive disconnect when you have that split right here. If there were no split, I'd probably be looking at this value for like a breakout, you know, and maybe it happens to be like a double 1-1 kind of thing. It looks like double that value, but they have that split. So yeah, I don't know. That's just a tough one. Doge is looking okay. I mean, it was evident it was going to break down. Hopefully you weren't like super surprised to see it do that. We had talked about, it's odd, it kind of looks a little like GME, and GME broke out, went a little higher than expected, kind of chopped to the upside, but it had divergence on these peaks. Like RSI was coming down on GME ever since that first peak. It wasn't exactly hard to see that. You can visually see it right here on the chart. There's a lot of similarities in that big push followed by the breakout, big push followed by that chop to the upside where it's kind of losing steam. You can see it again visually pretty easily on GME. It's like that double peak, clearly divergent bearish wise on GME. It's a similar kind of story for Doge here. I think it pushed up. I think there's a little bit of a weakness there. You can see it's holding up pretty well, but ultimately, like, these kinds of moves can go either way. If it does an advancement like this and it's trying to push the top and, you know, it's got divergence, and this does. I'm on the 1 hour. You can see it's kind of pulling down this whole time. We can go to like the 4 hour or something. Same deal. It's really the same. Yeah, it's just, so it was already kind of looking a little bearish. So you have this bearish divergence. It can be that this kind of a rising flag breaks to the upside. It's kind of rare. If it does that, interestingly, we talk about S-curves all the time, but Bolkowski actually has a probability that this actually goes the same distance. So if I recall right, if the flag breaks to the upside after a big pull and it's a rising flag, often runs about the same distance as the first height of the pole, which is what I have here. So I was already looking at like a 50-50 potential after this, and maybe it's not this high. I don't really care. You know, it doesn't have to be like the moon, but it can be a little bit shallower because it could go from this bottom, I guess, since there was a cross here as well. It's looking like $1 to $1.30. So I would still suggest that this is the hot zone right here for possibility. It also makes sense because on the grand scheme of things, if you look at where that is, you can plainly see it. Again, it's not like magic. You can see that that's one of the main intersections right here that we've been talking about. We used it multiple times here and here. Both of those were actually as far as it went before it did a backup on the first and the second run. So for now, I think there's a decent chance this run isn't over yet. The rally itself is already like really far overbought, but I don't think that matters too much because these stayed overbought for a long time. Like, this is a really long time. This is from December all the way through February. It was overbought on the weekly. And then the same thing back here on this first run up, it was overbought from March through June. I mean, it stayed overbought as it moved into that top, same as it did here. So I don't find the overbought nature to be particularly bad. So I still think it's more like, based on this early push, I think it's more like this one. It's just more similar to the 2016, which was Trump election as well. Yeah, it's more similar to that, in my opinion, going into 2017. So I still think you're going to get a bigger pullback maybe than expected and come back down to this area here before anything else happens. And then it's possible it advances again, it's possible it drops again, but it would do so from about 45 cents. So what we're doing right now could easily be argued is actually a preliminary supply. So the prelim supply is just designed to identify like where supply is trying to stop an advancement. Later, you'll come back to check that because it's been established as that's where demand was. And you can see why that matters because where it's at right now, 40 cents is a previous top and bottom zone, right? Well, mostly tops, 1, 2, 3, 4. So I don't know, man. I had it coming to either 34 cents, 27 cents, or maybe even as low as 21 cents. All of those are fine. It doesn't really bother me. I know it might bother some people if they don't get in when they want to get in, but these are the markers that I made. The timing on them, you were all looking at it like, well, it's way off, right? Well, yes and no. I mean, the idea was that they'd probably get there around the same time anyways, you know, going into the later part of the year. I don't really care. The illustration was to show you like this is a level of potential support, this is a level of potential support, and then this one. So if it only went back down and reset here at 34 or even, you know, maybe even a little higher, I think it's very likely that you're going to get a big bounce and just continue. I don't necessarily think this is the end of the run by any long shot. So I would venture at this point that it chops back down low and then somewhere around the end of December, mid to late December, breaks out again. And this is where I'm seeing like a possible, like kind of bigger run up to the top, around $1 to $1.30. I think it gets there. It's actually really close to what we had on the big picture, and you can ignore the yellow lines if you don't want the idea like in your head that it has to go faster. I don't care. It's just ideas. These feel likely to me. Like it hit the top right around January, and then I think from that point, you're going to get a big sell-off from like 140s all the way back down to this prelim. And I don't think you're going to go again until you've traded that prelim for a while. And this was the argument I made about a May to June run-up. But it follows through on this as well. This would be like an SOS with a backup. So you'd have a big SOS, and then you'd back up to where that late supply was way back in 2021 to check it. If it holds up and doesn't fake out, then you just advance. And if it does fake out, probably goes back up to 75 cents and then sells off and starts dropping really low, back to like 12 or something to start. But yeah, this is the way I would see it. If at this point the chop is good, then and it ends up breaking out, I think you're going to see the peaks again. I think we're going to go all the way up to like 15 or something ridiculous. And I don't want to go into that any deeper than that. So that's what I've got. So far, so good. Doge has been pretty easy to trade. So there's not really a lot of reason to be super speculative about it. I feel like it's pretty strong. It looks good. Yeah. The only concern maybe that some folks may have is that it's really overbought and it's turned down. But I mean, that was expected. So we're really just waiting to see what the prelim supply drop looks like. And then I think it's going to go again. I mean, I just think it's going to have that moment of like weakness, and then it's going to rally. So there'll be some headlines about it. It might drop 10% in a day or something, you know, something like that. It could be very dramatic, but maybe more, you know. Well, it's been a bit of a busy and yet not busy day. I haven't really talked about ChargePoint very much. I'm kind of like bummed out because it's like failing to advance here. There is a divergence on the RSI on the daily, which is a big deal because the last time we had a big one like that was right before this, and then it ended up breaking out and running pretty far. So it ran from 121 all the way up to like 232. If it holds, that's like a 90% move. If it holds, then you could have something very similar right now, albeit with a little bit more pizzazz, because this is essentially like a possible spring. It just has to get back over the top. So I don't have a very simple drawing here, but I think what we're looking at is an M cross that needs to happen. And actually the way I have it, let me get rid of some of these notes. The way I have it actually makes sense if it didn't do this kind of dramatic move. Yeah, so that's actually quite right. So this should come back down, and then it needs to hold. There's an earnings report, I guess the 4th. And it's definitely in a position right here where it could just dump. You could see that as like a rally down, like a sell down. There might be a desire to kind of drop the price to $1 here and like go ahead and hit $1 or something, you know, on earnings or right after it. So that's something. And I don't really get the argument against it as a company. I think it's doing fine. I haven't really seen anything terrible. The problem maybe is that the competition's kind of stiff, and then that Trump was elected, so people are like not bullish on EV stocks. But from my standpoint, I'm like, it's pretty close to just jumping over. You know, if it can get above this level and then retest the floor, 120, I think it's a big buy from in my opinion. I really do. So this would be a really simple to read move. I suppose the alternative is it just dumps to like $1, and then I don't know. It'd have to work its way out that way, so it could take time. Yeah, I've got a marker on my chart for like 129. This is like, again, not a very simple move because it could take quite a while to leave, but in theory, I think this goes all the way back up to like 350. I mean, it's not valued way beyond that at this point. But I genuinely think that's a possible move here. And I think there's a good chance it happens. Like a lot of things, maybe going into the new year, if we get this late year rally, it seems very likely to me. There's a lot of trajectory indications. So if you're kind of sort of bummed out about AMC lately, and I could understand why, don't fret too much. Yeah, it could take a little longer to work out. There are other stocks that are looking really good with some of their setups. And ChargePoint, I know I've said it before. Last time we talked about this stock, we were like down here. You know, we're in a similar place again, where I think it's looking like there could potentially be a big rally. I don't see any problem with this. I think it just needs to jump over, and it could essentially be an SOS or a move to an SOS. It's a big move. So for me, that's a good trade. 100% is really quite nice. I have not talked about MPW a lot. I've been tracking something kind of odd on MPW. Look, everybody that's going to look at this is going to say exactly what has already been said, which is it looks like I've already said it a couple times. It looks like a head and shoulder. It is. But I also know that this is one of those situations where it may just pull something quite funny and unexpected, because we did a build out for it, and it's essentially like the master fractal, as we call it. And that level that it needs to jump over is 5. Now that's quite high, but it found that there was a lot of consistency with that on the big picture. And ultimately, if it breaks over 5, it's probable, very probable in my opinion, that this could run all the way up to near $8. Now I've been saying that for a while, so it bears some amount of scrutiny perhaps, because you're like, well, you've been saying that for a long time. Yeah, I think what drove me to this recent chart, instead of using the master fractal or this or that, because the master fractal is basically 1-to-1. It just is right now. But what really drove me to it is the this intersection here. These two trajectories have been ongoing, like in my brain, and all the analysis I've done, they've been pretty important. And so when I looked at them, I think when we first did it, we looked at this as like part of a channel, that this might go up to the second part, and this was going to be like a breakout here and do like a 50-50 up. So that was when I had the original targets of like 8 and 8 something up here going into September. It just didn't get there. It never went that high. Did have a nice break up there, but it didn't ultimately work out, right? So it's kind of like, well, that's a bummer, you know, so then what? Well, it's starting to look more like that 2020 thing where you're thinking, it's going to break down, but then it doesn't break down. It takes a really long time. And it's building out a lot more like those, I don't want to say classic bottoms, but it's a little bit more like a phase B top that just has like an LPS. It doesn't kind of come down low. I find it to be odd. I feel like it should have sold off already. And so there is an expiration date on this, so to speak. And it doesn't seem that likely that it goes way beyond this week or next week before making a decision. So again, could it be very weak? Yeah, it's possible. You know, it's very possible this is just a giant head and shoulder, and then the shoulder breaks down and it goes down to like 330s or something. And yeah, and then we're just talking about this as if it's kind of like with AMC, that it's going down to check those lows. But I've been looking at this for a little while, and this kind of bugged me that it was like December 20th is a pivot here. And as I went in and checked out this is just a fib fan, but I went and looked at this fib fan and I checked out that middle, and I found it to be really compelling because it's not like it's demanding its way. It's just kind of there. And I can't shake the feeling that fib fan is correct in the way that it's built out. So there's a lot of interaction, especially in these moves up. It's following that trajectory. I don't see this very often where it's that kind of clean. So I thought it was really peculiar then when it came down and it hits these two marks here and here. And then the walk downs are really straightforward as well. So at first glance, you might think, oh, it's not that perfect. And you sit there and you study it, and it's like, actually, it's about as good as you would expect for something like this. Like, I don't think there's a lot of competition when it comes to this fib fan. So even like going further and looking at these interactions here, I just really drawn to this particular model. And I know this is dangerous because, again, it's like, well, you just really want this thing to run. It's never going to run. But if you combine this with the principles that you see in that master fractal kind of thing, then what would be achieved in coming down here would be to check this level from the original drop-in zone. That would be the main goal, would be to come back and check this liquidity. And ultimately, like, you would break out if you got above this liquidity here. And I'm finding it to be really interesting. That's where the shoulders have set up. So it's fascinating, a little bit frustrating, because I want it to go and it's not going. But from a trajectory standpoint, this really only is bad because it's not accelerating at like a pace that I think would be good. Like normally you'd want to see it walking up these, and acceleration is walking down them. So it almost looks more like a reversal, right, for that reason. But I do find that the trajectories are still at play. Like you can see the acceleration here still matches the same trajectory. So I think it's a bizarre setup. It's a little weird, but again, the master fractal looks pretty good. I mean, it looks basically done. It just needs to have like a finishing act here and break out. So I think if it jumps this creek and then it heads up towards 5, it's possibly going to have a pretty massive reversal moment. And these are obviously debatable things. Don't want it to be like, oh, here we go again, you know, Booksy with his disappointing MPW talk. You got to keep things in perspective, you know. There's a 330 kind of trajectory down here. That's what I was saying about threes. I think it's this level right here. And that's clearly been used, you know, by bears to... and maybe it goes there. That's the weird thing, is like, I think the expectation is that it has to do one thing or the other, but it could end up being both. And we may very well find that is what happens, you know. So I don't want to put it out there that it has to do this or has to do that, and then you think, well, there's no way, you know, it's just going to break down and chop here. You can't go all the way back up and all the way back down. Maybe you're right. And maybe this is lost for other reasons, you know, that we don't fully understand. That does look ridiculous to me, to go all the way up and then back down. I don't disagree. It may very well be that this has like a breakout that doesn't quite make it there, you know. I'm assuming that this is like timed out right and that it's already missed this bump, but maybe it does come up and then just kind of fails and comes back down, and that's where we actually go down to 3, you know. So I'm watching it carefully. I don't think that it's a completely broken chart just yet. You know, I know a lot of folks maybe don't like it, but you got to remember, like, this is a humongous, like, widening, basically, from the top back in 2021. And it's got a huge amount of volume on the bottom, right? So a lot of that is selling, but a lot of it's buying volume as well. So just like everything else, if it can manage to make its way and find a strong support, I think it's in a good place where it's going to be likely to, you know, break out in the future. I don't find it to be completely bad. I think it's a really good chart. You know, it's just kind of slow. So it's like a lot of things. Right now there's some possibility for upside, but you've also got the reality of like potential downside. And like some things, when we first did the analysis on this, it actually looked like it built out to 2000 and maybe it was going to be more like 2025, like mid-year, which is over here. So another possibility, right? Amongst others, amongst many. You see a bird? It's just a cat. My cat sees another cat. Yeah, so this was the original chart was like this kind of idea that this could actually chop back down and then go into a longer term kind of distribution like other things, right? And then essentially have like a breakout later on and return to the top much later, so on and so forth, okay? Well, okay. Maybe I said that in a way that just sounds really stupid because you're just like, well, then you're just saying you could go either way. For MPW, there's a strange contradiction of pattern here in like some of this analysis, and I haven't really been able to put my finger on it. So this is just ongoing. For some of the others, I feel a little more confident about direction short term. MPW is just going down right now. It hasn't broken out. It's failing to break out. What I'm saying is there's two competing points of interest. So like one seems a little shorter term to the upside. One seems a little longer term to the downside. One is a continuation of what we would see as a pretty straightforward continuation at that of what we'd see over 5 as like an S-curve. And if it's doing an S-curve, then it's doing it with the concepts that we talk about when we talk about like slingshot stuff. And that means that it's like purposely moved away from the main curve. And that happens. And it usually happens on this weird thing that looks like a head and shoulder. It's just a very difficult one to prove. So yeah, so like my analysis kind of ends there because in order for me to like prove that, I don't know, I'd have to go through like a lot of stuff and then it's still going to feel like speculation. So it's not an easy one for me to argue. Like in a breakdown on an S curve, when it does that slingshot, it moves away from almost equal parts, right? It moves away from the main S curve, I guess you could say. Moves away from the main trajectory. So like it bounced off the middle trajectory and went away from it, and it would be moving around that curve about 50%, 50%. And it's already done that. So in theory, like if it's going to break out, it could happen right here. And then if you look at the termination point for this head and shoulder, that's the middle of the head and shoulder. It's right there on December 19th. So there's really a lot of strong importance to this little pocket. So this is a very significant place. I'm finding that the trajectories don't seem to be going away. The larger trajectories to come back down absolutely seem like they're pretty low. I mean, they're down here at like 330, and they're big picture kind of trajectories, most of them. It would be silly for me to look at this and say that they're not there or that, you know, there's only upside possibility. It's just a contrarian play, and it's always been that way. I find it odd that the RSI is doing what it's doing here. It's really bizarre. It's got like a divergence ever since this bottom on October 24th. Price has been pushing lower and lower and lower. RSI has been building up. And I don't like it, but I do like it. And that's why it's hard for me to talk about it because it's like, it's ugly. There's a double M shape that's sort of formed, but it's really ugly. You see that? It doesn't look quite right. And then I don't fully understand why it's doing this chop that it's doing here, except for in the event of a breakdown, it makes more sense, but then it's not breaking down. It's like it's being bought up too much as it's going down. So part of me wonders if this is being brought up so that they can then dump it, you know, so they're bringing the RSI back up to dump it down lower. And then another part of me is like, well, but the bare minimum, you could look at this and say it's still divergent. Like, so what the heck? It's got to have some kind of upward reaction then before it comes back down. So that's why I'm like, not sure. Like, part of me thinks that it could have just like one big upward reaction to like 5 and fail, and then just start sliding down. Maybe that pops us enough and then it drives the price back low. Another part of me thinks that, well, technically, like, it's already done the 50-50 around the S-curve. Like, it could just explode. So, no, it's not about, I'm not upset by what you said. I think what I said did sound stupid, like, just to be blunt. Because you can't sit there in the market and say, oh, could go up, could go down. I mean, you can, but that's not really doing anything, right? You're not really doing any work. You're just kind of humming and hawing, right? I just find that the nature of this is sort of unclear. Like, to me, this could be the wind up and unwinding into a floor, and then it just springs and goes. But there's still a target left unreached, perhaps, from the bear side. It may very well be that this is just a highly contested stock, and it's not going to do exactly what we think it's going to do, because there's a lot of players in it that want to do different things. It may also be that this trajectory that I've got is never actually met. You know, when we look at the 2020 model, this is more akin to what happened. There was a lot of trajectories early on that just didn't end up getting met on these bigger moves. They were too steep, but they do indicate maybe where you come back later for price action. So, yeah, it's possible that this ends up chopping up into the new year, never really advancing. It kind of looks like it's going to, but ends up being kind of a head fake kind of situation and then drives back down. So again, that's like why I'm saying could be both, where this relieves the RSI divergence but doesn't break out, and then ultimately it's rejecting off that, coming down in that 50-50 fashion that we talk about to try to get back down to, maybe by earnings, try to get back down to these low mid threes, you know, that kind of stuff. And it's a cruddy situation because obviously, you know, you want it to go, you want it to run. Well, I do. And I don't want to be in a situation where these things are getting like push-ups, but they're not going anywhere. But certainly, you know, if the desire is to not go yet, then that's how I would do it. Yeah, weirdly, I think when we first did this, I say weirdly, but weirdly when we first did this, it was pretty straightforward. This was just a really long-winded move. It was going to take until like May or June, and that was that. And then I kind of flip-flopped here and there for other reasons, but when we started comparing it to 2020, it just had a lot of weird comparison notes that were made. And then it just occurred to me that, like, technically an M cross doesn't have to go down. An M cross could go up. And then I looked at the intersection here, and it's pretty clear. Like, this is the 50% at 5 back to this mark, which is where this intersection is. That's why it stood out to me so much. The trajectories are cool and all, but at the end of the day, like, the main reason that I thought that was probable is because when you go backwards, it works really well. So there's a strange continuity to this as an S-curve. And the fact that we've moved across it at this point, 50%, is very interesting to me. Like, it almost like it demands a reaction. Like, that is very interesting to me. And then there's a divergence. It just looks like it's being made to look very bearish, but it's not maybe as bearish as it appears, at least short term. See that? Right there, like that to me is extremely peculiar. This. Like it's just odd. So it's not exactly like rocket science, as they say. I just think that there's probably a bull target that is in view here, and it's not there yet. And so this could be a unique situation where the M cross actually did go up. We just didn't see it quite right. And if you don't remember what I'm talking about, it's this idea that if you jump up, it can continue as a, it could be very bullish. It could continue as a S-curve. And if it doesn't jump, which happens, and this happens sometimes, if it doesn't jump, then oftentimes it comes down, breaks down, and then goes down back to the bottom. My confusion is that that jump is not always super clear, right? Because sometimes that creek is really steep and sometimes it's really flat. So sometimes this creek is like super flat, and then sometimes the creek is kind of steep, you know? And it might seem like the steep creek always would then break down, like, oh, it's coming too low. It has to come too low to check that creek. It's going to break down. But I find that to be interesting because, like, what if the creek is really steep and then it does come back down to check it, but it manages to reverse here? Because technically, isn't that the same thing? Like, it crossed up, pushed resistance, it came back to check it. It could just reverse. I wouldn't be able to say much about it because that would really just be like a localized spring right here. Like a phase B top with a spring. So it's a reaccumulation with a spring, which I don't usually think about. So it's very possible that you get something very similar, and this doesn't even have a spring yet. I mean, it could drop low and then come back up, drop to like 390s or something. But, you know, that's all I'm getting at is like, it seems like there's a possibility that it may actually be something a little different if it can manage to get back above 5. Because technically that would be a breakout, and then the big picture spring or big picture M cross, there's one here and it hasn't broken below it yet. It's pretty wide, so if it does go down, it's going to take a long time. But there's also like this massive channel that it pushed resistance on and failed, and if it goes back up to 5, it's probably going to hit it again. That's why I'm wondering, like, it might be a short-term burst that then fizzles out quick, right? As a big head and shoulder makes you think it's going to go. I know, I keep going back and forth, but that's because this is a bizarre thing. And then when you look at this, I'm like, what the heck, dude? There's another creek. If you specifically come back to where this found support right here, after it jumped up right at 472, and you look at where that support was, going back to these peaks from over here, I think it's a really strong one. I think you could make a case that that's actually the creek, and these are just extensions beyond it. And if that's the case, then this jumped over it, and it's just going back to check the creek. It's not a full-fledged breakdown. So it would have appeared to me very black and white at first. And I already kind of mentioned that I thought it looked like it was going to come back down like a while back. But now I'm not so sure. You know, this could technically be a creek jump right there. And then if it is, this doesn't have to go low. It could break back out and just go right back up and finish the S-curve. That's why it's compelling to me as a possibility. So yeah, like I'm with you guys on the silliness of saying, oh, it could go up or it could go down. I'm with you on that. But I think it's going to boil down to this little spot right here going into the new year. It's a 50% retracement on this move. If this move can make a little bit of a stretch down, it may be a little bit more or less than that, but we'll see. I think it's going to boil down to what we see going on around 5, though. That's what I'm trying to say. And I've seen weirder things, man. I genuinely think if this crosses up, it's a big wedge. So if it crosses up, it has a decent chance of hitting a target. If it jumped up, let's just say it broke out tomorrow, or today or tomorrow or next week even, I don't know, it doesn't matter. A pretty decent chance to get back up to 580s, which is where there's a gap zone here and here. And that's a simple enough measurement. So if it breaks out lower, maybe it doesn't go as high. But that's a pretty good chance it's going to get back above the creek. You know, if it's got a decent breakout target right there, that's a big deal. It's almost like it's setting up to go back up to where it was, which this time would be above the outer creek again, and technically higher than this head and shoulder. So I don't want to like jump the gun, right? But I just feel that this is one I wanted to bring up again because I just really don't know. That's a really simple 50-50 to it's the same value. Back to that creek top. I don't know. What would happen after that is a big question mark, but I think it would be the same exact thing. It'd just be higher up. Probably come back down like to this level again, 5s. HAO. Yeah, we'll look at it. I know the day is kind of over. There's nothing moving. I got to feed my cats in a minute, so I'm going to peace out after this. Is GME going to break out? I don't see any kind of creek jump here. I just see that breakdown. I think you're looking at a reaction here, and if it can hold that reaction, which probably, this is not a great drawing, but I think if it can hold that reaction back up to 29s, and it can hold above by earnings, can hold above like 27, you might get another pop to 37. If it can't hold above that, then it's more like what you see on this side, which is, I think it's just going to come up and hook. I don't have this drawn out very well, but it would probably just come back up and hook at like 29 and not go any further. We tend to run up into earnings and then dive after. But again, it needs to kind of re-break back to the upside here. We're not there yet. The widest creek is way out yonder, probably up at about 29. Otherwise, this is definitely possible it could go lower. I mean, technically, we have a few more days before earnings for sure, so it could come up to like head and shoulder and go lower still than I've got it. I've got it kind of coming up and making higher lows, but you could hit 29.40s and then drop again into earnings back to 25s. HAO, not to be confused with the Homeowners Association. Health Technology Limited. Man, I don't know why you always bring up these charts like this. All right, well, I mean, there was an early bull run that broke here. Looks like another weaker one here. And then you've got some pretty straightforward creeks going down really far out there. This is probably the earliest bear trend back here. So I don't know what happened on this gap. But it looks to me like this was like whip around kind of stuff. So that looks like the same value. Yeah. It's basically a parallel. So it dropped through there. So this is like a 50% on that downtrend. This is ugly. I'm not sure what's going on here. This is really weird. Somebody wanted to sell off a position or open a short position or something. I don't know. Yeah, I don't. I don't see a lot to look at here until it breaks out of this creek or this trend, if you want to call it that. So you'd have to wait. RSI is doing something weird. It is divergent, but that's bizarre looking. It looks more distributive than anything else, so I'm not sure. Yeah, I guess is that $1? Is that what that is? Oh, I see. So they dumped it below $1. Fascinating. Yeah, this looks like it was set up from the get-go to sell off. So it was brought up a little bit to sell off, and then it started those LPSs and dropped it below $1. Not much of a trade here, in my opinion. I mean, you could have a big reaction, but it's flat. It's just a falling knife right now. It has like anything else, it always has a potential to like do something different, because you can see like when it's come down low, obviously that came back up, but it got overbought like pretty fast. And it didn't make any headway on price action. So it's just too much selling. If a reaction were to occur, maybe that gap up at 21 cents, that could change some things. You know, if it broke out there, it's possible then you could have a rebound. But that's about as far as I could take this one for now. Technically, this could just chop up until this ledge too, and then just drop again. Like this could be very similar. It just kind of pushes up and then dumps. I would suggest it's not a great trade unless this is broken. This is definitely a wall there. Like supplies taking the initiative each time. So it's a little early in the stock's history too, so it's a very tricky one. There's not a lot of price action to look at. I mean, I like the volume increase down here, I guess, but I just don't see a lot else to look at. maybe aiming towards 4 cent or something like that. I mean, AMC may not look the hottest at the moment for certain reasons, but it's got it's still got some teeth to it. There's really nothing. I'll just kind of finish with this today. There's really nothing to be said unless we come back down to like 450s. There's not much else to be said. If we broke back out above 5, I might want to readdress it because it could be like an early jump like this, and then it just leaves above 45 to 5 and just takes off. It's not impossible. But I also think that there's a decent chance it could sell off for another week and then break out again. And just to point out the obvious, you know, when this was down at 4, everybody's upset. And it's gone up 30%. It's lost some steam here and there, but, you know, it's not always doom and gloom just because, you know, you have a little downside or whatever. This is a backup. I don't know why we would be upset by that unless it just fails to advance. It's an important level. So no doubt $5 is significant. Certainly it met one of the hook levels that we have. You can see it right here. So there's clear evidence that that could be a stopping point. But I also think that the backup, if you come back down and get a good retracement on this 50% or 618 retracement, it could come quite low. It could come to 440. That's still not a full retracement. I could give you a wave 3 that goes all the way up to the top. So don't count it out just because it's come down a bit, you know. Really, unless this breaks through this creek right here, way down here at like 430, I'm not worried at all. Like, I don't really care, to be honest. I think it's fine. If it came back below this creek really low at like 430s, then yes, I think we're pretty much SOL at that point. But that's a big distance, so we're not there yet. Don't put the cart before the horse, so to speak. Maybe something bad happens and they do some kind of dilution. I don't know. But for now, like, we can't anticipate that. Y'all are like, don't jinx it, Booksy. I don't know, man. Just saying. I don't see how it would just drop all of a sudden unless that happened. My analysis is still that it's okay and it's going to be going up towards the 6s. I'm not convinced it's going to go significantly farther than that anymore, even though 869 is a great, or whatever it is, was a great number. I don't think it's a bad estimation for like a big move. It'd have to be something like this where it was like a massive push. Otherwise, I'm finding more evidence that they probably try to pin it below 6s and maybe at most like 7 something. Because I don't think this is actually indicative of where that supply is. I think it's closer to 6. So just based on the way it's set up. And the historical purpose of like where that would be back here if the shift hadn't happened, which would be right here around a similar time frame in December's. Some of y'all are like, well, that means we could run in January then, right? I don't know. I don't want to go that far. I mean, if it went up to like 6 and then dumped all the way back down to before January, jumped all the way back down to the 2s, I'd be like, maybe. But not yet. All right. I'll see you guys tomorrow morning. I will be on in the morning tomorrow. I was late today for a lot of reasons, but I'll be on tomorrow morning. I got to go feed some cats. Y'all have a good one, and I appreciate you. We'll talk to you later.